Okay. My screen is visible?
Yes, sir.
Yes, yes.
Yeah. Yeah. Okay. Uh, so, my hearty welcome to all the participants at today's session. Uh, we had scheduled a case study both for fundamental analysis and technical analysis so that it reinforces the theoretical concepts which we have discussed in the previous sessions. Okay. So, my case study will be a fundamental analysis of one of the prominent companies in India called Bajaj Auto Limited. Okay. Now, I will take you in a way, in a journey which will cover the various aspects which we have covered more or less in the conceptual session. So, the slides which I'll present to you about the company as a whole will try to talk about that journey which we have already undertaken while discussing the conceptual aspects of fundamental analysis. Okay. Now, Bajaj Auto Limited is a company which belongs to the Bajaj group of companies. And the Bajaj group of companies was started by Jamnalal Bajaj, an associate of Mahatma Gandhi, way back, more than 100 years back. Jamnalal Bajaj, a very well-known businessman and philanthropist of Bombay, uh, he, start, he associated himself with the Andolan, the independence Andolan, became a very close associate of Mahatma Gandhi, but he was also a very prominent businessman of his time. Okay. For those of you who may have visited Bombay or who are familiar with Bombay, under Bombay University you have a affiliate called the Jamnalal Bajaj Institute of Business Studies. It is an affiliate which gives a MBA program, both full time as well as for part-time evening students. Okay, so the Bajaj family is a very respected family of for many decades. Now, it comprises today of several brothers, and you can see here, prominent in them is Rahul Bajaj, but there are other Bajajes also, Shekhar Bajaj, Madhur Bajaj, Neeraj Bajaj, and Sanjeev Bajaj, and you have also Rajiv Bajaj, who is the son of Rahul Bajaj in this picture. Okay. Now, very recently, Rahul Bajaj has stepped down as chairman as non-executive chairman of Bajaj Auto Limited. Okay, he was chairman of the company in a non-executive capacity, and his son Rahul Bajaj is the managing director of Bajaj Auto Limited. Now, since Rahul Bajaj has stepped down, in his place, Mr. Neeraj Bajaj has stepped in as the chairman, as the non-executive chairman of Bajaj Auto Limited. Okay, now why this is happening? It is a part of their family settlement. There are various, cross holdings in the Bajaj companies. Cross holding means one brother is owning shares in another one company which is controlled by Shekhar Bajaj. Shekhar Bajaj is holding shares in a company controlled by Rahul Bajaj. Now, so there are cross holdings. So, as a part of the family settlement, the Bajaj family is trying to unravel these cross holdings and streamline the whole thing. Okay, so that is a part of their internal family matter, internal family settlements. We need not go into that. But at this moment, all that we need to take note of is that the non-executive chairman of Bajaj Auto Limited is no longer Rahul Bajaj. It is now Mr. Neeraj Bajaj. But Mr. Rahul, but the son of Rahul Bajaj, namely Rajiv Bajaj, is continuing as the managing director of Bajaj Auto Limited. Okay. This is in so far as the credentials of the promoters is concerned. I think, as we have said earlier, that it is very important to know who the promoters are. Are the promoters respectable? Are the promoters well known? What do people think and feel about the promoters? So I can definitely say that the Bajaj family is held in very high respect, and they are known to be people who are ethical, who believe in corporate governance and who believe in taking care of the shareholders and their employees. So that is insofar as the credentials of the promoters is concerned. Okay. The Bajaj brand name is very well known not only in India but across more than 70 countries in the world. And as I will show to you, it has been exporting heavily in the last several years as a part of its corporate strategy. So they have this banner which says that the world's favorite Indian, loved in now more than 70 countries. Okay, it's a very powerful message. It's a very powerful message, not only in India, but across the globe. And you may recall, some of you may recall, others might not, might have been too young or might not have been born at that time. There was a logo which was popularized by Bajaj Auto under the guidance of Mr. Rahul Bajaj. He was at that time the managing director, chairman and managing director. It was Hamara Bajaj. The Bajaj Chetak scooter was prominently known in many countries in Southeast Asia. So people, when they talked about a scooter, they said Bajaj. They understood scooter to mean Bajaj or Bajaj to mean a scooter. Okay, so Hamara Bajaj was a very well-known slogan many decades earlier. Okay. Now this is a photograph of the present management team under Mr. Rajiv Bajaj, son of Rahul Bajaj. Rajiv Bajaj, managing director. So under him, he has put together this photograph. This is his senior management team. So there is what I'm trying to get across to you, that it is not only a very respectable promoter, but they are also very transparent on who is what in the company and who are a part of their top management team. Okay. These are today the major product lines of the company: motorcycles and three-wheelers. Now you'll notice that scooters is not figuring here, because as a part of the corporate strategy of Bajaj Auto, they have slowly moved out of scooters. Mind you, scooters was the business with which this company started, and it was very well known in its own time for the scooters. But slowly over a period of time, under Mr. Rajiv Bajaj, they have moved away from scooters, and today there are two pillars of the company: motorcycles and three-wheelers. Okay. So you can see how corporate strategy keeps shifting. This is what Mr. Rajiv Bajaj has to say. And I would like to invite your attention to what is at the bottom of the slide. It pays to be counterintuitive. If you follow the herd, you are lost. Now, this is his business philosophy, that I will not be part of the herd. I will chart out my own path. And what is that? By that, what is the meaning? That he has deliberately given up the business line of scooters, which used to be his bread and butter at one point in time. He has deliberately given up the product line of scooters, and he is now focusing heavily on motorcycles and to a secondary extent on three-wheelers. So it pays to be counterintuitive. If you follow the herd, you are lost. So if you talk in terms of a generic strategy, corporate strategy, the strategy is of focus and differentiation. As I have mentioned to you in the earlier class, that it is very important to understand the business model of the company. What is the business model? How is the company planning to make money? So the business strategy of the company, the business model of the company is, in terms of a generic strategy, focus and differentiation. Focus, you understand, I'm focusing on motorcycles and scooters, and differentiation means the product itself, I will have features and specifications will set it apart from the rest of the people who are competing in motors or in three-wheelers. So I will make myself different from them. Okay. So the strategy, again, the business model is focus and differentiation. So export first. Now you can see how they went about this whole strategy. Even as rivals viewed a dull export scenario in 2015 and 17, people were trying to export and they were not having a good time. Bajaj upped the ante in several overseas markets. Now its export volumes are on the rise. So when other people were getting disheartened with with their export performance, Bajaj still went ahead very strongly and invested in the export markets. Secondly, intra-city drive. Bajaj persevered in the three-wheeler segment despite a dull phase in the beginning. The segment is now seeing 30% growth. Three-wheelers, and it is the market leader. Today, Bajaj Auto has more than 60% of the market for three-wheelers in India, and it is exporting three-wheelers also abroad. Products offensive. Demonetization led to softening of the two-wheeler market. That means demand slowed down because of demonetization. Okay. The company dealt with it by launching various models. The sales numbers are now impressive. So they tried to deal with this situation by bringing out newer and newer models in order to capture whatever attention they could get in the market, because the overall market was depressed due to the demonetization. In order to counter that, they came out with newer models to capture the attention of the target market. Okay, so here what do you see? You see a company which is innovative, which is not afraid to take an initiative, okay, different from the others, and which is having a very clear cut strategy going forward. Okay, what I'm trying to tell you here is that, as we have discussed in fundamental analysis, conceptual discussions, it is very important to understand the company. Very important. You do not invest in something which you do not understand. Okay, and this whatever I put together, this is all from the net. All from the net. In fact, last 2-3 days, that is what I was doing. I was just researching the net on Bajaj Auto to see what else I could understand and know about the company. Okay, and that is what I'm sharing with you. Okay, so it's very important that you understand the company and understand the business of the company. What are they trying to do? And if you are convinced that they are doing the right, they are in the right path, they are doing the right things, then you should think of investing in that company. We need to know, okay, what is this two-wheeler and three-wheeler market? Okay, now let us see the two-wheeler market. The two-wheeler market, so far as Indian manufacturers are concerned, you can see this is the trend over the year 2000, financial year 2009 to financial year 2020. You can see it has been a consistently upward trend. Okay, 2020, you see there was a dip because of the pandemic, and these results are of 31st March of that year. So 31st March 2020 was a time when the markets crashed, when everything went into a tailspin. So 2020 figures have dipped, but that is an abnormality. It is an aberration. Okay, but if you take the period up to financial year 2019, you'll see that there is a consistent upward growth in both the motorcycles as well as in the two-wheelers. Okay, so the company is in a business which is having a long-term growth, and there is no reason to believe that these long-term growth prospects will not continue. This country with a growing population will always need mobility and transportation. And mobility and transportation is provided basically at the entry level by the two-wheelers and by the two-wheelers. Before you go into a four-wheeler and a car, the entry level point for anybody who wants to have mobility and transportation convenience will be the two-wheeler. So it has a long-term future. It has a long-term future, which we must be convinced about. And by giving you this period thing over the period of 10 years, I'm showing you that the past reinforces that belief that there is a long-term growth prospect in this market. Okay. So I will now briefly, show you the slides where I have highlighted the points, some of which I have already mentioned to you in the course of the last few minutes. So, Bajaj Auto focuses now on motorcycles and three-wheelers. It has moved away from the scooters, which was the product it had been known for many decades, Hamara Bajaj. Bajaj Auto is today among the top 5 companies of the global motorcycle industry. It is among the top 5, okay, in the world. And who are these top 5? Number 1 is Honda motorcycle. Number 2 is Yamaha. Okay. Number 3 is, I think, Suzuki. Number 4 is Hero Motor Corporation, and number 5 is Bajaj Auto. Now, I will shortly show you something very dramatic has happened in the last 1 year, and now Bajaj Auto has overtaken Hero Motor Corporation. It has overtaken in the last couple of months. Okay, I will come to that. But suffice it to say here that in the top 5 motorcycle manufacturers in the world, there are 2 Indian companies which are figuring in them, and those 2 are competing with the likes of Honda, Yamaha, and Suzuki. Okay. In the three-wheeler market, Bajaj Auto has more than, it is not 50 actually, it should be more than 60% of the market share in India. And what are its future plans? Will enter the electric three-wheeler space in mid-2021, followed by electric quadricycle and high-powered motorcycle being developed in tandem with its Austrian partner KTM. Now, the KTM bikes you have already they are already there in the Indian market. You see them, very sporty looking. Okay, so the technical partner for Bajaj Auto is a very well-known Austrian company called KTM. So they do their development work, on technology development, product development. They collaborate and share. Okay, and that is what helps Bajaj Auto to bring out, not only upgrade their models frequently, but bring out new models from time to time. So there is a technology backup in the company. So when we have been talking about fundamental analysis, and we are talking about what are those strengths, and what are the things which make the company what it is, the technological strength is always there. Whether it is within the company or it is in collaboration with an overseas partner. As I mentioned earlier, the business strategy is based on differentiation and focus. Differentiation is with an emphasis on getting into more and more premium models. Now Bajaj Auto is no longer so much emphasizing the entry-level models. It is now progressively moving into the high-powered motorcycles and into premium models. Okay. So that is where there is a shift which is taking place in its product and marketing strategy. Okay, you can say the business model is also being tweaked to go in favor of more high-powered motorcycles. There is an emphasis on quality and on process improvements. That means improvements in productivity, improving the efficiency of operations. In other words, trying to cut so that you are able to save on costs. There is a significant emphasis on that, and a continuing emphasis on quality. Thrust on exports. This is something which has happened dramatically in the last couple of years. Exports accounted for 53% of the volumes compared to 48% a year ago. Just imagine the number of motorcycles it is totally producing and selling. Out of that, exports account for 53%, and it is a rising trend. Okay, I will talk more about it in this slide only. The company is an employee-centric organization. It keeps the welfare of the employees in mind. During the COVID pandemic, it has taken several steps to see that its employees are not put into a hardship. And just like what has happened in IEM UM Group, because of the leadership of Professor Dr. Satyajit Chakraborty, in the Bajaj auto family, if any employee has lost, has passed away because of COVID, or has been otherwise badly affected because of the COVID situation, the company has stepped forward to help that company financially, say in a significant way, and that is a part of their internal notices and all, which I saw in the net. So it's very much employee oriented, very much employee oriented. Okay. Very recently, within 2021, Bajaj Auto has become the first two-wheeler company globally to cross a market capitalization of rupees 1 trillion. Now, what is market capitalization? Market capitalization is simply the number of outstanding shares being traded in the stock markets multiplied by the current market price of each share. So I'll repeat that. Market capitalization is the number of outstanding shares being traded in the stock market multiplied by the market price of each share. And if you did that, you will come to what is market capitalization. That market capitalization of Bajaj Auto has crossed rupees 1 trillion. And it is the first two-wheeler company in the world where it has a capitalization of more than rupees 1 trillion. More than rupees 1 trillion. So if you convert that into dollars and compare it with the market capitalization of maybe Honda or Yamaha, the Bajaj Auto capitalization, even in dollar terms, will be more than those two companies. Okay. Bajaj Auto's current market cap is 63% higher than Hero Motor Corp. That means if you did the same thing with Hero Motor, that means number of outstanding shares being traded in the stock market multiplied by the current market price of the Hero Motor Corp share, and you'll come to the figure of market capitalization of Hero Motor Corp. And you compare that with Bajaj Auto, you will find that Bajaj Auto's current market cap is 63% higher than that of Hero Motor Corp and 43% more than that of Eicher Motors. Why we are talking Eicher Motors? Because it is the company which produces and sells the Royal Enfield brand. Okay. So in a way, it is a competitor by virtue of the Royal Enfield product. But if you take Eicher Motors, of course, produces and sells, in addition to the Royal Enfield, it has other products like tractors and so on. Okay. And it has got also small trucks. So if you even so it is in a competing area, but there are other products also in Eicher Motors. But if you take their market capitalization, even compared to them, or Bajaj Auto is 43% higher. Now, having said that, I'm just giving you a pictorial view of the market shares which were there in May 2019. Now, between 2019 and 2021, there has been a significant change which I will show you. Okay, 2019, you just see Hero Motor Corporation had 37% market share. Compared to that, Bajaj Auto was only at 12%. Okay, Honda had 27% market share. Even TVS had 14% market share. This is the position in May 2019, just 2 years back. Okay. In August 2020, again you look at the numbers. First, you look at the numbers which are within brackets, which is the number of units sold. So, August 2020, for the year ending August 2020, Hero Motor Corp sold 328,068 units, two-wheelers. Okay. Honda, and it had 36.5% market share. Honda sold in the year ending August 2020, 223,496, and it had for 24.87 market share. This is here, Honda. Okay. Now, compared to that, And you see even Suzuki, Suzuki two-wheelers, 139.936 and it had 15.57 market share. Bajaj was lagging all these companies, having sold only 100,000, only about 100,000 units, and it had only 11.13 as market share. Okay, right. Now we will take you forward from there, but I have given you what was happening just within the last 2 years' time. Okay, let us continue and we'll see where things have changed. Riding high on the exports, Bajaj Auto has emerged as the largest motorcycle maker in India by sales in April 2020. Just last month. Just last month, based on its strong export performance, Bajaj Auto now is the largest motorcycle maker in India by sales as recent as April 2020. It has gone beyond, it has gone past Hero Motor Corporation. The maker of the Pulsar and Discover brands sold 348,173 units in April, year ending, of which 253,543 units were exported compared to 37,870 units in April 2020. That means for the year ending April 2020, it had exported only 37,870 units, as compared to which 253,545 units were exported in April for the year ended April 21. The company has projected average sales of 200,000 plus units in the overseas markets in future. Okay. Commercial vehicles sold in April 2021 were at 39,843 as against only 5,869 in April of last year. So you see a report card like this, that, and this report card is current. Okay. Not current money, here it said ended September 2020. Okay, not very late back, 6 months back only, 6-7 months back. So net sales, Hero MotoCorp, because it was September 20, it is not 21, 25,850 crores, Hero Bajaj 24,037, very close on its heels. The situation has now changed. This was September 2020. PAT, but you look at PAT, Hero MotoCorp, the market leader at that time, 2,524 crores, but the PAT of Bajaj Auto is at 4,266 crores. Okay, no doubt it has dropped compared to the previous year. Okay, but it is still almost double that of the PAT of Hero MotoCorp. Market capitalization, as I was emphasizing earlier, it is more than 1 trillion rupees. Market price as of 2020, current market price 3,482, and whereas MotoCorp was 3,098. Okay, I will also give you a chart on the current market prices and the market prices over the last 10 years. Okay, P ratio in the region of 23.6 for Bajaj Auto, Hero MotoCorp 24.5. So why the PE ratio is important? The PE ratio is one of the important parameters which we look at when we try to calculate the intrinsic value of the share. So here we have already in a report card like this, what was the PE ratios way back in September 2020, just about 6-7 months, 7-8 months back. It was 23.6 or so. Okay. So now, having looked at the company, having got a feel of the company, okay, and I hope all of you are also with me in that respect, that here is a company which is a respected company, which a proven track record, and with a future going forward. The company has a business model which has been evolving over a period of time, and today it is strongly focused on export markets and on a strategy of focus and differentiation. And this strategy of focus and differentiation is apparently paying dividends, apparently delivering the outcomes which it is expected to deliver. Okay, so we are therefore in a situation where we are on the right track. Maybe the company seems to be a good company prima facie without having looked at too many detailed numbers. So now we shall have a look at the detailed numbers in terms of the balance sheet, the profit and loss statements, and the ratios calculated on that basis, the way we talked about in the session on fundamental analysis day before yesterday. Okay. So I will uh, go to a new share. All of you can see the screen?
No, sir. You first unshare yourself and reshare the screen.
First closed on the previous one, sir.
Your previous screen is still being shared.
Now, trying to check the new share.
Sir, please close the
Balance. Actually, I'm going to the balance sheet.
Yes. Actually, I understand, sir. But thing is that, so may I show you the?
If you can show me the balance sheet, Professor Sogoto.
Yes. Just a minute, sir. So first of all, you have to close your screen, sharing screen. Stop the sharing screen. First, you stop the sharing screen. Just a minute, sir.
The balance sheet. You can show the balance sheet. Yeah.
Yes. I will. Now it's shared.
Yeah. I hope the participants are able to see the screen.
Yes, sir.
Yeah. Okay. So this is the balance sheet of Bajaj Auto. Acha, I am audible. Voice is okay.
Yes, sir.
Am I audible?
Yes, sir.
Yeah.
Yes, sir.
Okay.
Perfect.
Okay. Okay. Fine. Okay. So, uh, as we have discussed, that in order to now take the fundamental analysis of Bajaj Auto forward, we have to look at the balance sheet, profit and loss statement, and the various ratios connected with these two documents. Okay. So, what you see here is the balance sheet for the years starting with 31st March 2015, then 16, 17, 18, 19, 20, and 21. That means as recent as 31st March 21, you have the balance sheet of Bajaj Auto here. Okay. And as you can see, on the liability side, you have the equity share capital, you have the reserves and surplus, and then you have total shareholders funds. Then if I scroll down, yeah, Professor Sogoto, if you can scroll
Yes.
down slowly,
Yes. Yes. Yes.
then you have, yeah, then here you have, they have used the terminology non-current liabilities, which is nothing but what I had chosen to call the fixed liabilities. This is long-term borrowings, okay, of different kinds. Deferred tax liabilities, other long-term liabilities. But the important thing to notice here is that in terms of long-term borrowings, there is hardly anything. In the year March 2019, 20, 21, there are no long-term borrowings. The first item, number 12. So you can say this is a company which is almost debt-free. You appreciate? This is a company which is almost debt-free. There are no debts in this company. So when we talk about a debt-equity ratio, you know, that debt is almost zero. So what is the term we have used earlier in our discussion day before yesterday? We have talked about a term which is called solvency. So we had talked about a solvency ratio. The solvency of this company is very high. It depends on its own funds by and large to conduct its operations. Okay. For the long-term funds which is using is all its own funds, own equity and retained profits. There are hardly any borrowings in the company. So it is a financially very strong company, very, very strong. Yeah, are you with me? So almost debt free, debt equity is zero. Okay, I don't have any obligations to the outside the financial institutions and all. The deferred and all those are very small things which are to maybe some statutory authorities and all. But there is no long-term debt financing in the company. It is zero. Okay. Then we come to then we have the current liability. We can scroll down. Short-term borrowing. 1 minute. Short-term borrowings zero. Short-term borrowing zero. No overdrafts. No short-term borrowings from banks. Can you believe it? Yeah. Please go down further. Yeah. Yeah. Now just to explain to you one. Can you scroll up, Professor Bogoto? Just scroll up, please. Yeah. Yeah. You see here that there are trade payables. What is trade payables? Trade payables is the money which I have to pay to my raw material and component suppliers. So as you can see, the trade payables are consistently increasing. In other words, I am doing my business with other people's money. I'm not borrowing anything from the banks. Mind you, I'm not borrowing from the banks. But my suppliers are giving me credit. They say that, okay, I'm giving you the raw material, I've given you the component, you pay me after 1 month, you pay me after 3 months. So what is happening is I am doing my day-to-day operations with other people's money. Okay. And when does this happen? This happens if I have got a very, very strong vendor group. I've got a very strong vendor group, a vendor group of suppliers who are committed to the company, who are committed to the company. And this is again one of the significant strengths which is there, which you understand in fundamental analysis, that if you have a vendor base of who are supplying you raw material, component, other things, and they are giving you the money, you keep the money and you pay us back after some time. That means I'm doing business at the cost of my supplier's money. What can be better than that? But it also shows how strong the company is in having built a vendor base. The supply chain, as we call it, the word is supply chain, the uniqueness of the supply chain, the strength of the supply chain. You are able to understand that by looking at these numbers. Okay. Yeah, we can scroll down now. Yeah. Now we come to asset side. Okay. Yeah. Can you come down? Yeah. Tangible assets. Yeah. 1 minute. No. Okay. Tangible assets. Yeah. And then there is small amount of intangible assets. That's not so important. Work in progress, hardly anything. Other asset, housing. So tangible assets. Now let's come down further. Yeah. Fixed assets. Fixed assets. Okay. Non-current assets, you have these other than fixed assets, the other things which you have, which I have shown you, which is a small amount. Okay. And then we have the breakup of the tangible assets. 1680 90.91, fixed assets 1680.91. What is the breakup of that? We can see later on in plant and machinery, buildings and all that is shown. Okay. Non-current investment, deferred, these are, yeah. You come down further. Can you scroll down? Yeah. Total non-current assets become so much. Yeah. Scroll down further. Yeah. Now yeah. Now here you will see current assets has got inventories, and there are trade receivables. That means money which it has to collect from the people to whom it has sold, from them how much money has to be collected. So it is outstanding dues to be collected. Receivables, in other words, sundry debtors. Which are to be collected with the 2716 this thing. Okay. Now if you did so total current assets is 14,175. Now if you take the total current assets and you divide it by the total current liabilities, total current assets is 14,175. Okay. What is total current liabilities? Can you scroll up? $5,643. Total current liabilities 5,643, right? Total current liabilities is 5,643. And what is total current assets? Total current assets 14,175. 5,643 and 14,175. Current assets divided by current liabilities, you can see, is more than two, much more than two, almost approaching 3. So what does it show? A company which has got very high liquidity. You recall we had the 3 parameters: liquidity, solvency and profitability. Okay. These are the 3 things with which we are judging the company. So here we have a company which is very solvent because it hardly has any debts. Debt equity ratio is almost 0. A company which is highly liquid because the current assets divided by current liabilities is almost approaching 3. And now let us look at now let us look at profitability. So Professor Sogatuk, if you can put the the ratio, the slides on the profit and loss statement. First profit and loss statement, and then we take the ratios.
Sir, I'd like to pose one question to you.
Yeah.
Regarding this. Take this question after you have shown the profit and loss and also the ratios. Okay. So we are seeing stellar numbers from this
Yes.
company.
Yes.
And indeed, Bajaj Motors is one of the leaders now.
Yes.
We know that this is a great company to be in. Now, when I see the long-term debt completely zero,
Yes.
and a complete debt-free company, which was not a leader 1 year back and
Yes.
has sprung up as the leader,
Yes.
taking 3 or 4 positions up higher.
Yes.
Does it also caution about some red flags? We had seen
Yeah.
accounting fudging in
Yes.
certain companies
Yes.
of ill repute, which
Yes.
were not of that ill repute some time back.
Yes.
Say, for example, the Satyam computers.
Yes.
Okay. So after you have shown the other like profit and loss and the ratios,
Yes.
please throw some light on
Yeah.
how to do due diligence on such.
Yeah. Okay. 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 I will comment on that. Absolutely. Absolutely. Okay. Right. So now here, for the same period, we have got here now more or less the same period up to 31st March 21. We have the income side, the the revenue side, and the expenses side. Okay. Can we scroll down slowly, please? Yeah. So yeah, as you can see here, that the total revenue, and there is something which is also shown as other income. The other income is those which are not coming from basically the operations, but it may be from sources of investments or from many other sources. So not directly related with the operations. That is why it is shown separately as other income. Okay. Now we have come to expenses. When we come to expenses, okay, you have raw materials consumed. You have got other various types of expenses which are there. Okay. Then employees related expenses, finance costs are very small because as you have seen, there is hardly any debt in the company. Okay. Then so total expenses you are coming, can you scroll down please? Yeah. Then you have come to profit before tax. Okay. Then various tax elements which are there, total tax expenses. Yeah, can you come down further? Yeah. Yeah, profit and loss for the profit and loss for the period. Yeah, for the period is 4,554.59 crores. This is the profit for the period year ending 31st March 2021. 2021. Okay. Acha. Then certain below this certain additional information has been given. Yes. Can you show that, Professor Sogoto? Yeah. Scroll down. Yeah. Yeah. One basic EPS. The earnings per share. You recall one of the important things which you had to look at was the earnings per share. That means there is a profit after tax, and if there is no preference capital, so there is no deduction for that dividend of that, and so profit after tax divided by the number of ordinary shareholders gives you the earnings per share for earnings per each share. Diluted and basic means that in case there has been issue of capital in an earlier year, like a bonus share or a right share and all, then the earnings per share might get modified. But in this case, there has been nothing. So a basic EPS and the diluted EPS is one and the same. Okay. Then you have got equity share dividends, the amount which has been paid out as dividend. Now, for the year 31st March 2001, I think the dividend has been declared just maybe a couple of days back. So in this document, there is no dividend appearing for the year 31st March 2021 because that has just been declared, and obviously these records are some time back. So, but in previous years, you can see what has been the dividends which have been paid. With equity share dividends, what has been paid, and you can see that it has jumped very sharply from 1591, 1736, 5208, and now in 2021, I'm sure the dividend will be jumping further. Okay, and when we show you the market price of this share, one of the reasons why the market price has gone up so much is because of the expectation of higher dividends, possibly. Okay, so uh, uh, right. So we have looked at EPS. We have looked at what has been the where the dividends have grown in the company. Okay, and I want to now show you before I go to the ratios. I want or okay, let us see the ratios, and then I will show you the trend of the market price over the last 10 years. Okay, yes, Professor Goth, can we go to the ratios, please?
Yes, sir.
Ratios. This this is a can we go to the ratios, please? Professor Sogoto, can you hear me?
Yes, yes, sir.
Yeah.
I am also sharing ratio.
Right now, what is appearing is, the balance sheet is appearing.
No, no, sir. Your net is slow. It is visible, students.
Yes, sir. Investment valuation ratios, face value, dividend per
Yes,
share.
But
yes.
in my case, it is not appearing in my screen.
Okay.
Sir, I think network issue is on your side.
Sir, check
This
in your
is
tab. In your tab, check that where is in the PDF on the PDF sign. Click on the PDF sign in your taskbar. There is a PDF sign, right? Add of PDF. Click on that on your taskbar. Yes, just below at the bottom of the screen. Can you see the taskbar?
Yeah. Okay. 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 Thank you.
Okay, sir.
Yeah. Yeah. So now here we have put together some of these ratios. As you recall, in our discussion day previous today, we said that there are finally certain key metrics which are in terms of ratios which you need to look at. Some of the ratios we have already discussed in the course of the last few minutes, but here we have tried to put together everything at one place. So the face value of the share is 10 rupees. Dividend per share, as you can see, it is here. Okay, so a 10 rupee, a share which has got a face value of 10 rupees, you are getting a dividend of 140 rupees for that share. For that 10 rupee share, you are getting 140 rupees as dividend per share. Okay. Then you have got the net operating profit per share. Okay, operating profit as we have defined before depreciation, amortization. Okay, profit before tax, before interest. Okay, those definitions you keep in mind. Operating profit margin. profit before interest and tax margin, net profit, return on capital employed, return on net worth. Yeah. Now, these are the things which we have been discussing earlier. Return on capital employed is I would like you to test this out because I have not actually verified the calculation. But return on capital employed should be profit before tax, profit before interest and tax divided by net assets, which is net fixed assets plus net current assets. Okay. So what we are seeing here, it is a kind of a mixed trend because it used to be say 30 around 31, 30, 29, 33, 23. So in the year financial year 31st March 21, the return on capital employed has come down. It has come down quite a bit. Return on capital employed has come down quite a bit because it used to be in the region of about 30, 33, all that, but it has come down to 23.59. Return on net worth has also declined. Return on net worth has also declined, as you can see, which is profit after tax divided by shareholders' funds. So it used to be in the vicinity of 21, 22, 25. It is in the year March 20, we are getting here 25.59. I think this needs to be just verified, checked, because that was the pandemic year. We need to verify this 25.59. And here return on net worth is shown as 18.07. Now, what I want to basically get across to you here is that here we are not seeing an upward trend in the return on net worth. We are not seeing an upward trend in the return on capital employed. Yeah, but what we are seeing here is that it is a decent return, because a 18% return on net worth for the equity shareholder is a decent return. It is not an exceptional return. Return on capital employed 23.59 and all thing, it is a decent return on capital employed. It is not an exceptional return on capital employed. Okay, that is the point to be made. Despite all the hoo-ha we have created earlier, despite all that, if you look at the bottom line, then the return on net worth for the year 31st March 2021 is nothing on all that great to talk about. It is acceptable, reasonable, but not nothing great to talk about. Return on capital employed is also acceptable, reasonable, but nothing so great to talk about. Yeah, can we scroll down? Can we scroll down, please? Are you able to see the screen?
Yes, sir.
Okay. See, what I want to also, bring out to you is that you can always take the annual reports of the company, actual annual reports of the company, and put down these numbers and do the actual calculation of the various ratios. At the same time, because there are many sites available, like moneycontrol.com and so on, so many sites where all these ratios and the trends over a period of 7 years, 10 years are readily available, you can adopt them. You can adopt them right away. But I would like you to just be careful that when you adopt those, just make at least 4 or 5 sample checks that the calculations of the various ratios are correct, because some of these ratios are worked out with certain assumptions. Like I may work out a ratio which is say inventory turnover ratio, and I may take the average of the opening and closing inventory and use that for doing the inventory ratio. Or I may take only the end of the year figure as the inventory and use it for the inventory turnover ratio. So in all these things where I'm taking figures, ready-made figures from a particular site, please do a check of 5, 6 different parameters and and satisfy yourself that the figures have been correctly worked out. Okay. If you are not getting that figure, then you need to know what is the method that they have adopted in working out those ratios. It is also important that you check some of the the details of the balance sheet items and details of the profit and loss items with the actual annual report items, so that you are satisfied that the figures they have taken and put in their site, they have been actually taken from the annual reports, that there is no discrepancy in those. Because ultimately the test is to take the annual reports of the company, and from the annual reports you put down these figures and derive the various ratios. But for simplicity and for ease and convenience, many a time, or why should I say many a time, most of the time, we are inclined directly to go to a site and take the ready-made data from the site and use it for our analysis. But please double check that. Please double check that. So on your screen at this moment, are you seeing profit and loss account ratios? Are you seeing that?
Yes, sir.
You are seeing that. Okay. Okay. So by this, what I am trying to get across to you is that we have looked at the balance sheet, we have looked at the profit and loss statement over the 5-6 years, we have looked at the various ratios which are relevant and important for our understanding of the financials of the company, and we have come to certain conclusions, right? Now, one of the things which is not here but I can mention because I worked that out is that what is the what is the compound rate of growth in the 5-6 years, in the last 5-6 years? What is the compound CAGR, as we call it, compounded annual growth rate? The compound annual growth rate is that even if the sales are fluctuating from year to year, or the revenue is fluctuating from year to year, if I take a base year and I take a terminal year, between the base year and the terminal year, if the revenue was to be compounded at a certain rate every year, what is that compound rate? So what I see from here is that the compounded annual growth rate for sales or revenue in this case has been 6.25%. The compounded annual growth of the net profit has been 4.44%. And the earnings per share, compounded rate of growth of the earnings per share, as we have seen from the screen, that is 4.45%. So these are the annual growth rates, compounded annual growth rates for sales, for net profit and earnings per share. Sales 6.25%, net profit 4.44%, earnings per share 4.45%. Compounded growth rate in the past. Why I'm drawing your attention to this is because we may have to use this when we go forward to calculate the intrinsic value. Okay, now I'll just request Professor Sogoto, if you can show the chart of the market prices in the last 10 years, please.
Yes, sir. Yes, sir. Now, so
So this is the market prices of the share of Bajaj Auto as on March 31st March 2015, 31st March 2016, 17, 18, 19, 20, 21. Okay. So taking March 15 as a base, okay, then March 21, we have the figures on the left side in the table, as you can see. March 15, 2000, March 31st March 2015, the market price of the Bajaj Auto share was 2016. And as on 31st March 2021, the market price was 3670. Okay. And today, as recent as day before yesterday, 20th of May, was it 20th of May? 21st of
21st
May.
May.
21st of May. 21st of May, the Bajaj Auto market price was 4,125. 4,125 was the market price of the Bajaj Auto share as on 21st May 2021. And as compared to that, the market price of the Hero MotoCorp share was 2,884. So, so 2,884 is that of another very prominent company, Hero Motor Corporation, and Bajaj Auto for the same date was 4,125. Okay. Now, what I want to bring out also to you is that March 20, I can understand because of the pandemic, 31st March 20, it fell sharply. Stock market crashed and all that, it fell sharply. Okay. The prices have been, before that, the prices have been going up steadily. Somewhere it is the rate of growth may have slowed a bit, but it has been growing steadily. So between March 15 and March 2019, there has been a steady upward trend. If I ignore this decline which took place in March 2020, I see a very sharp rebound, very, very sharp rebound. It has not only caught up, but it has bounced. And now, as I was telling you, March 31st March, it has crossed and it has gone beyond the 4,000 mark. This is a very, very sharp rebound. Now, we need to understand when such a thing happens, and I am forced to recall the words of Professor Anupam just a little while back, we have to be careful. Okay, we have to be careful. What is going on? What is going on? I need to investigate this a little more. Okay, what are the circumstances and reasons for such a sharp rise in market prices? Okay, which is going beyond the trend of previous years. Why I deliberately gave this graph here is that I could show you, I could highlight that this rebound and going forward in the market prices is something which is out of its normal trend. It is not in the normal trend, it is beyond its normal trend. And we need to understand what are the circumstances behind this sharp upward rise. Okay. So to some extent, Professor Anupam, I think I'm trying to understand your question, trying to answer your question.
Yes, definitely true. Definitely true.
Yeah, because something abnormal has happened. This is definitely abnormal. Okay, and and it belies all the previous track records. So what is going on? Okay, is it that some market operators are manipulating the prices? You see, this happens. That there are certain interested parties or people form a cartel in the share market and they manipulate the prices. Is it something like that? We do not know. Therefore, there is need for caution. The company is sound. We have seen all that. Okay. But when you are trying to buy a share in the stock market, please be aware that besides the credentials and the soundness of the company, there are other forces that work in the stock market. And those forces can often hijack the company and take you into uncharted territories, and an investor who is not vigilant and who is not conscious about them, that investor may fall a prey to manipulation in the stock market. He may fall a prey to these speculators who are speculating with the share, or they are forming a cartel, or there are certain other forces at work which are maybe beyond the company also, but the investor is a prey to that. So there is a need for caution. Definitely there is a need for caution when such a thing happens, as I have demonstrated to you.
Explain this point again. Can you please explain this point
You
again?
see, there is a basic financial soundness of a company which takes the share price upwards in a certain manner. You can see that from the period 31st March 2015 to the period 31st March 2019, there has been a slow but consistent growth in share prices. You agree with me? From 2016 on, in March, 31st March 2015, it has
Yes,
gone
sir.
to 2911 in 31st March 2019. From March 15 to March 19, it has increased from 2016 to 2911. And this, when plotted on this one, it shows you that there's a steady but reasonable growth in market prices. If you ignore the sharp fall because of the pandemic, because we have looked at 31st March figures of the market prices fell. There was a stock market crash. So that has dipped. So that can be explained. But what is not getting explained is that from that 31st March 20 figure, the market price has rebounded, and rebounded in a very, very sharp manner. And it is now, and as of 31st March 21, it was 23670, and as of 21st May 2021, it has crossed it has, as I told you the figure, it is ruling at 4125. It has crossed the 4,000 mark. It is ruling at 4125. And as compared to that, the share price of Hero MotoCorp as on 31st, as of 21st of May 2021 was only 2884. Only 2884. Compared to that, 4125 Bajaj Auto. What is happening? That is why I'm saying that this may be something which may not be entirely in the realm, in the domain of what the company's performance should be. Maybe somebody is speculating with this price. And if there is speculation going on, you need to be very, very careful, because as an investor, you should not you are buying the share of a fundamentally strong company, but you are going to enter at a wrong time. You are going to buy it at a wrong time. Maybe the prices are getting jacked up because of certain forces which are working in the market, and whether it is the right time to enter or not, that the technical analyst will be able to tell you. Okay, but basically what the fundamental analysis is telling you, that there is something going on here which we need to understand. Just don't get carried away. The very sharp rise in prices, let me ride the wave. No, tomorrow it may fall equally sharply and you will be left high and dry. So even if it is a fundamentally strong company, there is need for being alert and caution. What is the price at which you are entering? Are you entering at the right price? You have to think about that. Okay. Have
Sir,
I explained that?
Yes, sir. Sir, I agree with you completely. But here I have a different question. I mean,
Yes. What is that question?
That question is, suppose if we take the smartphone industry, okay, consider the smartphone
No.
industry.
One minute. What is the question?
That is, I'm just about to explain you the question. Okay, the question is that because before pandemic, you just said that there is a straight fall, the stock market crashed. It could be that sales also fall that time. Okay, but when the they removed CG removed the lockdown, it could be people start buying more and more smartphones in case of smartphones. So in this case, can't it be that the sales were on hold, and the moment the lockdown was removed, the sales suddenly shoot up. What happened in case of MI-20 when it released, it sold I forgot, so in crores. I think it sold the units. So just the moment the lockdown was removed, the sales of the company
Okay.
shoot up.
I have understood what you are trying to say. Surely, after the lockdown was removed, slowly the economy started reviving. Okay, and we are talking of that first wave. We are talking about, and we thought that we are coming out of the first wave. The government also became very complacent. All that has happened. You allowed elections to take place. Haridwar pe kumbh mela karwa diya, sab karwa diya. You are very, very confident. I am on top of the situation. ठीक है. Now that confidence led to people buying a lot of motorcycles. But what I'm trying to explain to you, that buying a lot of motorcycles is very fine, no problems. But that has translated into a market price of the share. It has translated into a market price of the share. Okay, number of motorcycles and market price of the share need not necessarily be correlated one to one. Okay, market price of the share is decided also by various other aspects of the company in terms of its financials, in terms of expenses, and so on and so forth. So it is very heartening that the company is selling more motorcycles. It has overtaken the market leader. Those are the good things. Therefore, there is a feeling of euphoria about the company, and that euphoria is translating it into a share price which is rising very sharply. But is it rising more sharply than justified? The question you have to ask yourself is the increase in the market price justified? Because a normal investor, he does not go into too many details. He sees the market prices are going up and he wants to ride the wave and he gets into the market. Is it justified? Is this rise justified? The rise in the market price, is it justified? Could it not have been slower? I'm asking that question to you, counter. Everything is okay, but is it the right time for you to enter into this company?
Okay, so
Buy the
then
share
how
of
would
this.
I get to know about it? I mean,
Yeah,
how do I
yeah,
analyze
yeah.
it when sales are
Now,
good
you
for
see,
it?
now, what the fundamental is telling you is that because of this sudden sharp spurt, you need to be cautious. You are on the right track. You are in the right company. But is this the right time to buy? Is this the right time to buy? You identified the stock. You are happy with the stock. But is this the right time to buy? So, right in the beginning, we have said the fundamental analysis shows you what to buy. Technical analysis will show you when to buy. Okay. So, I hope this when to buy issue you have to now approach in your way with technical analysis and also from the fundamental point of view with a bit of caution. Is this the right time? Now, I will come to the calculation of the intrinsic value shortly. Okay. So I have covered the ratios and all. Now, in the process, I'm happy that I have answered some of these doubts and very legitimate questions. Now, Professor Sokoto, will you please show the slide on calculation of intrinsic value?
Sir,
Yes.
if I could take just about
Yeah.
a minute
Yeah,
to
please.
address some certain more things here. See, even within the fundamental analysis, when we are looking at those numbers, ratios, profit and loss and everything, and we have determined that this definitely is the right stock, we should also be looking at certain other aspects of it. As Professor PKB has rightly explained here, this is virtually a debt-free company. And if we take like the pros and cons of the company, definitely being virtually debt-free will be a very good sign for this company. And if we see, as Professor PKB had explained, they were doing their business by their strong supply chains assistance here. So what we see here, if you get into the numbers, you'd see the average data days. Data days is basically the number of days within which you will have to pay back your whoever has given you the money. So that has increased a little, although they do not have long-term debt. Their debtor days have increased, wherein the suppliers have also shown basically the confidence in this company. There are other indications which are also very important. If you see the shareholders pattern over time in Bajaj Auto, you will find that the promoters' share has consistently increased little by little, and as of today, it stands at more than 50%. It was earlier like slightly below 50%. The promoters themselves, they are also quite confident, and today it stands at around 53 or 54% promoter share. How the other shareholder pattern has changed? Earlier, it was more into the hands of foreign institutional investors, but we have seen over the time the domestic institutional investors have invested more and more into this company. And for the ordinary shareholders like us, the percentage has remained more or less the same. Okay, so these are also other indicators that you should be always looking at. Sorry, sir, if...
No, I think it is very pertinent and pertinent points you have made, sir. I would just like to add one more thing to what you just now mentioned. You see, this shareholding pattern is something very relevant. Are the promoters investing back in the company? If you find a situation where the investors are increasing their holding in the company, it shows that they are, that means there is a strong commitment of the promoter group to the company. On the contrary, if you find that there are companies which are apparently doing well, but you'll find that the promoter group is consistently reducing its percentage share of holding in the company over a period of time, that is not a good sign. That is not at all a good sign. If the promoters are slowly withdrawing in terms of the percentage of shareholding in the company, it means you have to watch out. What is their intention? What is their intention? So I think Professor Anupam is a very pertinent point. If you find that the promoters are increasing their holdings in the company, it shows their commitment to the company. And if the promoters are committed to the company, there is reason for confidence in the investors also.
Yes, and one other question that is there in the chat box by Anubhav Shen was basically, if we see the numbers of export versus the domestic numbers, Anubhav's question is, why are Indian customers not so eager to buy Bajaj automobile products? Actually, it is not so, Anubhav. We need to also weigh in the fact that Bajaj Auto over the time has changed the direction of what they were, as PKB sir has said, Hamara Bajaj, the scooter, Bajaj Chetak, was once every Indian household's pride. And then they shifted completely from the scooter segment. And now it is not only just the motorcycles, Bajaj Auto is also into the three-wheeler segment, where it is the world's #1 manufacturer of three-wheelers, and that you would see on the Indian roads as well. As far as the motorcycle segment goes, within the motorcycle segment, the sports and super specialty sports segment, Bajaj has presence in terms of their Pulsars and KTMs and those kind of motorcycles. But you are right, in the motorcycle segment, within the Indian customers, the other segments like 100cc, 125cc, their Bajaj Auto is not the topmost choice of Indian customers.
No,
but
sorry for the intervention. I'll just come in there. Perhaps I should have put that along in my write-up. Very consciously, it is Bajaj has decided to reduce the emphasis on entry-level models. So as a part of the product strategy, they are not emphasizing the entry-level models anymore. They are emphasizing at the higher end, the premium models, where the pricing is better, and therefore they are able to get a higher margin on those bikes. So that has been also a part of their product marketing strategy.
Exactly, sir. And one segment that they have shifted from, and this segment actually has got a lot of sales, which helped Hero MotoCorp a lot, is basically the gearless scooter segment. Over the time, the gearless scooters are also the rage. Now Bajaj has taken a position that they are coming back into the gearless scooter, not really in the traditional scooters, but their Bajaj Chetak electric vehicles. They have invested into the R&D. Probably we'll see the electric vehicle segment also Bajaj coming in a big way later.
Yeah. Okay. Okay. So can we go to the last lap of our discussion today? Professor Sogoto, will you just show that slide on calculation of intrinsic value?
Sir, already I have.
It is there.
Yes, sir. Just click the.
Okay. Yeah. See, you may recall that we had talked about various techniques for calculating the intrinsic value. We had talked about the discounted cash flow technique. The discounted cash flow technique is the one which is the most proven and authentic technique for working out the intrinsic value. But the difficulty with the DCF technique is that how to develop very comfortable and genuine cash flow statements for a period of at least 7 to 10 years. Okay, that means I must be able to have that data, that free cash flow data, before I can use that for any purpose. Now, because of this difficulty, unless you have internal data, unless you have got inside information, many a time it becomes difficult to use the DCF technique. So what people do is that instead they readily go to what is the PE technique, the price earnings ratio technique. And we had talked about the price earnings technique. And in that we said that one, you have the constant dividend growth model, then you have got the historical model, and then you have got the cross-sectional model. Okay. Now the constant dividend growth model requires you to know certain parameters which at this basic layman stage we have not discussed with you. For example, we have talked about the beta of a company. Okay, all that we said in that discussion is that beta signifies the riskiness of a company. So if a company is more risky, then the investors have a right to earn a higher return. Okay, if the company is less risky, the investors expect a lower return. So riskiness of a company given by its beta has an impact on the expected return expected by the investor. Now, why the return expected by the investors becomes important? Because the cash flows have to be discounted and brought to the present by the expected rate of return of the investor. Okay, so that our expected rate of the return has to be calculated. For that, I need the beta. Okay, for that, I need to know what is the risk-free rate of interest. I need to know what is the market premium. Now, there are several technical aspects of this which is beyond the discussion for a layman. Okay, so and then so therefore, I have not adopted that model for our purposes in today's case study. I have taken recourse to the cross-sectional analysis and to the historical analysis. Okay, now if I adopt these approaches, let me go and put it to you in a simple manner. One thing which I will need if I'm going to look at the price of the share, I will have to look at what is the expected growth in the earnings per share. So if I have the historical data of the earnings per share growth in the last 5-6 years, and if I make an assumption that that trend will hold by and large going forward. Now, this is a very big assumption. That trend will hold by and large going forward. That means the more or less revenues and costs will be in the same manner, will be happening in the same manner going forward. Then I can adopt the past trend to give me the EPS growth for the future year. So in this case, if I take the CAGR of the EPS for the period, say, between March 17 to 2021, it comes to 4.45%. Okay, the EPS for March 2021 is 157.50. This is from the profit and loss statement, the data we have just now seen a little while back. Okay, so the projected EPS for the next year will be therefore 1.0445 into 157 point, which becomes rupees 164.51. Okay, so this becomes the projected EPS for the year 2021. Sorry, for 2021-22 going forward, 21-22. All right. Next, I have to select the P ratio. Now, when I come to the P ratio, as I said, let me look at how does the P ratio compare with, say, Hero MotoCorp. And I put this down for the 4 years which I could get the data. So in the year 31st March 2018, the P ratio of Bajaj Auto was 20.37. In 19, it was 17.97. In 20, I have kept blank because 31st March was an abnormality. So let us not have that abnormality there. So I've skipped 20, come to 21, it is 22.80. Okay. Hero MotoCorp correspondingly was 25.4, 14.09, 22.05. Now these P ratios I have taken from a site where these calculations are already there. Okay. Now, as I have mentioned earlier, working out of P ratio also requires you to be also to spell out how the calculation has been done. The price you have taken as the opening, as the closing price, or you have taken the average of the opening and closing price, what you have taken. So there are, whether you have taken the price going forward, or whether you have taken the earnings going forward or the earnings for the current year. So there are therefore issues with the calculations of P ratio. Without going into the detail of P ratio, adopting something which was ready-made available at one of the sites which was already there, I have adopted those figures from the site and compared the P ratio of Bajaj Auto with Hero MotoCorp over a period of 4 years. And the trend which you see is on your screen. Now, two things are from here. One is, it is giving you a comparison with a competitor, with a leading competitor. The other thing, it is giving you a historical trend in your own case. So both are there. So looking at this data which is with you, you have to make a selection of what would be the right P ratios for you to adopt. Now, assuming a strong recovery in the economy and in the second half of this year, 21, after the second wave has, let us hope, has been controlled sufficiently, and taking into account the strong export performance of Bajaj Auto, I am proposing a P ratio of 24.0. Okay, I am proposing a P ratio of 24.0. What is the P ratio as on 31st March 21? 22.80. So I am proposing a slightly higher P ratio, taking note of the fact that yes, there is a recovery. Hopefully there will be a recovery after the second wave. The company's export performance will continue to be very strong. And if that be so, let me take 24.0 as a possible P ratio. Okay. Now, having said that, I must also tell you that because of all these assumptions we are making, you are welcome to paint three scenarios. You may have a pessimistic scenario, you may have a very optimistic scenario, and you may have a reasonable scenario. The figure which I have adopted for a P ratio is in what I think is a reasonable scenario. Okay, it may not be the optimistic, it may not be very pessimistic, but I think it is a reasonable scenario. Okay, so as I mentioned to you, because of so many assumptions and uncertainties, it is always better to work with these scenarios. So I have here adopted the reasonable scenario. Okay, so having got the EPS, having got the P ratio, estimation of its intrinsic value is quite simple. That means it is the P ratio multiplied by the projected EPS for the year which is going to end, which is the year 21-22. So I come to a figure. As you can see here, of rupees 3948.24. This intrinsic value you compare with what is the figure as on May 2021. The current market price of the Bajaj Auto share as on May 20 or 21st, whatever May 20, is rupees 4125. So you are talking about intrinsic value which is slightly lower than the current market price. So what is the indication? What is the indication? The indication is that the market has already priced this intrinsic value adequately. And today it is not a situation where the market price is lower than the intrinsic price, and therefore I should go and buy the share in the expectation that the market price will rise in course of time, rise to the intrinsic value. The intrinsic value is lower than the current market price. So the market price is already fairly representing the intrinsic value. It is marginally higher. So it is therefore, based on this estimate, it is not the right time. It is not the right time to buy the Bajaj Auto share. This is the way I say. It is not the right time, and therefore, it reinforces what I have said a little earlier, that you need to investigate that sharp increase in market price which has taken place. Are there circumstances which are beyond the normal corporate circumstances? Is there something which is more than that happening in the stock market? Is it being driven by some euphoria? Is it being driven by some speculative group of people? I mean, we need to understand and investigate, but surely this may not be the right time to buy this share, so far as fundamental analysis is concerned. Okay, so with that, uh, I thought I have been able to give you a fair understanding of the theoretical discussions we had day before yesterday, and we have now looked at a actual situation of a company. We have looked at actual financials. We have looked at actual possibilities of calculating the intrinsic value. So now, if there are further some questions, I'll be happy to answer them. Professor Saugato, there are questions? Any questions?
Yes, sir. No, sir, there is no new question. Is there? No, sir.
No new questions on the chat box yet.
Yes.
No new questions. We have discussed already. We have discussed all the important issues in the last few minutes. I think those were the most important issues. In fact, what Professor Anupam, you had also highlighted, and what some of the others had also asked. So you are left with a little bit of a mixed feeling. Oh, I have identified a good company, basically sound and all these kind of things, and I was itching to invest in the company, but no, this is not the good time. So maybe I'm closing this session with to hand on the baton to the technical analyst, that when to buy. Now I hope in the next session they'll be able to tell you when to buy with an actual case study. and Professor Saugato, can I request one thing?
Yes, sir.
Yeah. Now now that we have a fundamental analysis of Bajaj Auto, will you draw some that moving average chart?
Yes.
Okay, and a head and shoulder chart about which we were talking yesterday for the share of Bajaj Auto, and taking the trends in the prices, moving average and all that into account, whether the time is right to buy the share or not. Will you be able to show that by way of a chart? Maybe not now, but if we can work out that chart, we can share it with our students.
Definitely,
Huh?
sir. Definitely.
It will be interesting, that we have now done the analysis fundamentally, but technically, is it the right time to buy?
So basically, actually, as a technical, when it is the breakout, the high level, that time we enter in the market as a momentum trader. But you are absolutely right. This is the high time, we as a technical, we never suggest to anyone to buy a stocks in a high price, honestly. Because of that, when it is break a new high, then it is the volume has been created and all the buyer side has price will increase to more and more, make a new high. So as a trader, technical trader, you always enter in the market when it is break a new high. So we enter in the market, already we have to exit, but we doesn't hold the position in a long time. And you are, it's a great basically presentation. Always we learn more and more from your sides. Uh, really was a very good presentation.
Okay. So thank you very much for patiently listening to my presentation today, and all the best to all the students and participants. Keep safe and well. Thank you.
Thank you, sir. Uh, Good afternoon, Joel.
Good afternoon, Professor Sagato. And Professor Bannerjee, it was such a pleasure to listen to you talk about Bajaj Auto and in general your perspective on this. I think Prasanjit and I have actually been having a parallel conversation on WhatsApp about how much we're getting to learn from you about these perspectives as well. Between you and Professor Anupam, I think it's been a very nice discussion. And so we'd love to kind of take it forward from here itself. And to
Okay.
your point, start with the technical analyst's view of Bajaj Auto, and then from there we can build out other
That
aspects,
yeah,
and we
yeah.
can bring it all
That
together.
that would be great. That would be great actually. Yeah, yeah, yeah.
Wonderful, wonderful. Prasenjit's camera, it seems, does not is not working. So Prasenjit, we can see that the icon has come up, but it seems that the camera is not working. Maybe it's some kind of a driver's or a problem.
Can you hear me?
Loud and clear.
Yes, yes.
At least the audio is coming.
Yeah.
Thank God.
So your thoughts can reach us. So
I
that's all
mean,
good.
this is a problem with the, I guess the bandwidth of the internet. I don't know. I just got a 200 Mbps, but then still. So I'm just turning off the camera. Can't help it.
No
Yesterday
problem.
also the same problem was there. So
No problem, Prasenjit.
right, Joel, go ahead.
Great. So once again, it was such a joy, and this is where I want to quote a very prominent fund manager who I know personally and quite well. Saurabh Bhatia is the head of fixed income for DSP Investment Management, and he had this very interesting thought to share. He's like, how as parents when we talk to children about what you should learn so that you have a reasonably safe career going forward. Most Indian parents say that you should learn you should learn both English and maths. So both the language skills as well as mathematical skills. And from the perspective of investment management, fundamental analysis is like English and technical analysis is like maths. With fundamental analysis, it becomes very easy to tell a good story about a company, about an organization, what's going on with the company. That helps you to understand the governing mechanics behind what is happening with the company right now, what might the future prospects of this company be, and as such, what is the intrinsic value of a share in that company as of today. That brings into consideration macroeconomic factors. It brings into consideration industry factors as well, not only what's going on in the world right now. And you and I know, I mean, in a way, I guess you as students are lucky that while you were students, you got to see such an uncertain time in our lives. uh, for me, this is the third major crisis since I became a professional. uh, the first time around, just after I graduated, was the dot-com bust, and then 2008 was the global financial crisis, and now we are seeing the pandemic and all the uncertainty around that. So, as a fundamental analyst, looking at that, the environment and what is going on right now, to get a sense of what might pan out in the world of financial investments is very valuable. From there, you come to industries. In the world of industries, this time around with this crisis, we are hearing of what is called a K-shaped recovery. Now consider this: the markets were going on their merry way, and then there was a sudden crash around March 2020 when everything was uncertain. There was no sense of what is going on. A lot of people pulled their money out of the equity markets, and as money leaves, prices tend to fall, right? So that happened, and then after some time, when people had some time to think about what is going on, money started coming back into the markets. But here's what is interesting. Some sectors began to do really, really well. The financial sector, the education sector. And some sectors, unfortunately, began to do very, very badly. Sectors like travel, like hospitality. So what you are seeing is while the drop happened together, the recovery happened this way. So some sectors did incredibly well, some sectors start to stagger and suffer. So for you, when you are looking from the fundamental analysis lens, trying to understand what is happening in the industry that you are looking at becomes very, very important. Then it comes down to the company. What is going on within the company? And within the company, like Professor Bannerjee spent a lot of time really walking you through this, taking the lens, for instance, of Bajaj Auto. What is happening with Bajaj Auto right now? What has been happening over the past few years? How has the company's performance been? And what is likely to happen based on the strategic decisions they are taking today? Right? The assumptions that you make. How can you make those assumptions as educated as possible? And so some of the best research houses around the world do not only secondary research, not borrowing, using data sets, for instance, from places like Bloomberg or Refinitiv, that's the Icon terminal, or all the various sites that you have that carry repositories of data. There is FactSet, there's a bunch of others. And then they also look at kind of financial news and economic news that surrounds the company, what will have an impact on the company. But a lot of them also then go further and do primary research, where they engage with the management of the company, talk to them about their plans and their agenda. So during my time as Bloomberg, one of the reasons at Bloomberg, one of the reasons people subscribed to the terminal also was because Bloomberg would actually uh, keep a repository of the calls with the management that analysts have had. And the management of large companies typically have calls where they talk about their strategic direction and analysts question them about it. So it's always important to understand, one, the quality of management, two, what is the management strategic direction, and whether the information that they are giving you is designed just to protect the price of the stock, or are they being honest and upfront about both the good and the bad. And so analysts usually question the company very, 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 very accurately. Analysts, in fact, take it one step further as well. I have known, I mean, my career has brought me in contact with many wonderful sector analysts as well. And some of them actually go out and into the market and talk to dealerships, talk to customers, talk to people who are in any way connected with the organization to understand more and more of the nuances of the company. And that is very, very important. Remember, a lot of the fundamental valuation decisions are made when you have information that others might not have. And that is where you are able to nuance your models, and the assumptions become sharper and sharper and more accurate. Because if these assumptions are not accurate, then you could have a wildly differing, even with the same set of formulas. You will hear of, or you will already heard of, the discounted cash flow model, the weighted average cost of capital model. You have various different models, the dividend discount model as well. Sorry, various different models to come and to arrive at the accuracy of what might be the intrinsic value. And then from there, you have to decide based on what you think the intrinsic value of the company is right now and might be going forward, you take an investment decision, right? And Professor Banerjee made a very good point. This helps you to refine whether this is a good company to be invested in at all. But whether it's the right time to be invested in is a matter of looking at not just these fundamental factors and the layers upon layers of assumptions that you create, but also what have those assumptions from the past been manifesting in the price of the stock, right? Which is why analysis of the price of the stock becomes so important, right? Because in addition to, like we spoke yesterday, in addition to the intrinsic value, there is also this layer of sentiment. What does the market think and feel about this particular stock? And what is the market thinking and feeling about the markets, about the industry as a whole? If you think about it, for most very well-run companies, not much changed from February 2020 to April 2020. But their stock also would have seen this tremendous reaction because there was panic in the markets. Uh, was it Rothschild who said that when there is blood in the streets, buy? Right? So these are some kind of things to think about. So and with that is kind of the lens with which, like Professor Banerjee rightly said, the what to buy versus the when to buy kind of becomes incredibly important. So I'd like to invite Prasenjit to to talk, and he's also been listening to the session and taking a few notes. And there are a few slides he'd love to share with you as well. But also to talk about, so we'll talk through two lenses, right? One is we'll look at Bajaj Auto because that's been the focus of our conversation, and we look at, okay, while fundamentally you've heard the story of Bajaj Auto, technically what do the charts say, right? So we'll try to look at that, and then from there on we'll try to come up with a process where you as students of stock analysis, and also keeping in mind the theme of this workshop for the layman, right? What can we do to come up with a meaningful process for analysis, which will help you to look at a very vast universe of stocks, because obviously it is impossible to go and conduct a meaningful fundamental analysis of all the stocks on the exchange. So how do you filter from, let's say, the 1500 odd stocks that are trading on LSE, or the 5000 odd stocks that are trading on BSE? How do you filter from there and come down to a small universe of stocks that you can pay attention to based on some meaningful criteria? And from there, after you apply your lens of fundamental analysis about for each of these companies, how then from there can you also ensure that you are making a well-timed investment decision? So that's kind of what we look at with Prasanjit's session now, right? Prasanjit, I hope I've made some sense. Over to you.
Yes. Thank you. So good morning to all of you. Good morning, Professor Bannerjee, Professor Ghosh, and Professor Bhattacharya. Well, I just picked up one particular point that I was listening to the audio, and there was this saying: fundamental tells you what to buy, and technical tells you when to buy. So this is actually so true. I mean, it is really important that you understand what you are buying and at what price you are buying. So there are a lot of good companies, right? There are a lot of good companies, but then they might not be a good investment idea. So it's like, let's say, if I ask you whether Honda City as a car is good, or Mercedes Benz C-Class model is good, which one is better? So obviously you will say Mercedes Benz, that's the better car amongst the two. Now, if I ask you that which one will you buy, you have a deal wherein the Honda City, which is worth about 12 lakhs, is available at a, let's say, 50% discount. It's available at 6 lakh rupees. And the Mercedes Benz, which is roughly about 40 lakhs, that you have to pay 60 lakhs for that. So now if I ask you, so the Benz is at 60 lakhs and the Honda City is at 6 lakhs, which one will you buy? So obviously, despite the fact that the Benz is a better car, but the price that you have to pay is not worthwhile. So obviously, we all will go for the Honda City, correct? So this is what is the difference between a good company and a good company available at a good price. Okay. So what about technical analysis? Technical analysis is like, timing. So yesterday, those who had attended my session, I was giving an example wherein, let's say, you go to the railway station and there is a train which is supposed to depart at 9 in the morning, 9 o'clock. So it's supposed to depart at 9 o'clock. So you would obviously be reaching the station at least, say, 5 minutes before that. So a technical analyst would actually wait for the train to move. He would just not jump onto it. And he doesn't have any idea whether it is supposed to move at 9 o'clock or not. That's a fundamental information, which I may or may not be aware of as a technical analyst. So for me, what is important is whenever the train just starts to move, I will jump in. So I might not get the window seat if I'm doing that. But just in case, if the train left 3 hours late, so someone who was looking at the watch and went as per the schedule of the train, so he would have got onto the train at 9 o'clock and he would have to wait inside the train unnecessarily, correct? So these are the two differences. Now the best combination is that you got to know the fundamental side as well and the technical side as well, and then mix both of them together. Because if you are buying technically something, at times you will not be knowing why you are buying. You can see buying happening. So that's the data you try to rely on. And at the same point of time, if I only look at the fundamental side, then I would buy something, but then it is when the market has to realize. So it's like, let's say if I had 10 kg gold, okay, 10 kg gold in my garden outside, okay. So this is a fact. Now, if I want to sell this land to any of you, will you buy? If I ask for say 6 crore rupees, you will not, because the land is maybe only worth 50 lakhs. So you will not believe my story, although it's a fact. So you will only give me that money when you are convinced that yes, there could be some gold in the land. So that realization might happen next day, or that realization might not happen in the next 10 years also. So despite the fact that I had gold, worth 6 crores in my land, in my backyard, but then nobody since believed it, nobody was willing to pay the price. So that is a problem again. So anyway, I just wanted you to give some perspective on both the things. So there was an interesting, uh, uh, line which our MD, Mr. Nilesh Shah, who is the MD of the Kotak Mahindra Asset Management Company, the mutual fund division. So I was listening to one of his interview, I think a couple of years back, on a TV show on Diwali Eve. So he said one very interesting thing, that prices are actually driven by three things in the market. One is the fundamentals, second is the liquidity, and third is the sentiment. And I found it so true. I mean, the moment he said, and it was like an instant connect, right? So just imagine it's like an and function. It's not an or function. So for the prices to go up or down, there has to be three things have to be in sync. So let's say there is gold in my backyard. So that's fundamental. But since you don't believe in my story, the sentiment is not there. So the sentiment is missing. Now let's say you believe me, you are my friend. So you believe in the fundamental, you believe in my story, so you have the sentiment. But then let's say none of you have the money to buy, pay me that much of upfront cash. So again, liquidity is a problem. So let's say if you had fundamentals and liquidity, which is a case when, let's say, uh, markets are, nose diving, markets are like in a panic. So obviously fundamental valuations at that point of time really come to a attractive level. Okay, so fundamentally it's a green. Liquidity, you might have liquidity, correct? So you might have liquidity, but then if the sentiment is not there, if you are afraid of buying something, if you are still uncertain, so let's say you had the liquidity of 6 crores, you had money in your bank account, you can just give me the money up front, and you know that there is a gold in my land, but then you are very uncertain. You are uncertain because you are feeling that even if you buy the gold, nobody else will buy from you. So you had the liquidity of 6 crores. You believed in my story. You know that there is gold in my backyard. But then you are thinking, who will buy from me? If I buy from Prasenjit, to whom am I going to sell? So the sentiment part is missing. So unless these three things are in sync, the prices are not going to move in sync with together. Now there is something very interesting that I have also noticed, that even if the fundamentals, the perception of what is fundamentally right, to me, I'm going to be very honest and very blunt actually, that there are certain assumptions also when we are doing fundamental analysis. I'm not a fundamental analyst anyway, and I'm not even an expert in that. So but then at a basic level, what I understand is that there are certain assumptions that we are making. So the assumptions are that the numbers that we are looking at, that the company is giving me, are correct. So that is a basic assumption, right? that whatever number fundamentally you are being reported, it is correct. Unfortunately, maybe 70% of the companies in India, I doubt about their reporting practices. Okay, so there are a lot of ways to manipulate. So you don't know really whether the company is actually telling you the right story or not. So the numbers maybe technically, I mean, from mathematical point of view, number juggling point of view, they are correct. But then is that reflecting the true picture, or the picture that you want to you are seeing, is that what it is? So that's always a question, the data. Second is the factor that there are certain assumptions regarding the forward earning. So what is forward earning? Estimate of what the company is going to earn in the future. So if the company is earning 1 crore, so nobody knows future. I can't even tell whether I will be alive tomorrow. So if I can't give a guarantee of my life even for tomorrow, who am I to, make a realistic assumption or a concrete assumption about somebody else's business and somebody else's company? And again, who the guy whom I don't know, and whether I am even looking at the right number or not, right? So there has to be some element of probability, and there is a bit of subjectivity as well. So it's not a 2 plus 2 4. It is again based on the skill set of the analyst doing the fundamental analysis. So obviously technical analysis too is almost very skill dependent. Okay, but then fundamental analysis, like if you think that it is to some extent more of a consensus base, it's not again. So every analyst will have a different view and even a contra view. Not everybody will agree. So the basic thing that I'm trying to put across is that prices are actually driven by three things that you have to understand. Okay. So last year when there was a crash, why did this market crash? What was wrong with the fundamental? And why did markets recover? So overnight, nothing changed, right? Overnight, on reality, on ground, nothing changed fundamentally. But the perception of the fundamental changed. The perception changed about the what is going to be the likely future. What is right now is not what I'm looking at, because markets are always forward looking. So markets always try to discount what is coming next, what can happen, because you make money only for predicting what is coming, right? So let's say if there was a gold in my backyard and which you got to know, which nobody else has the information, since you are my friend, I just told you, and you know this is going to come out in the media in the next 2 days. So the entire world will get to know about this. So the land which is worth 6 crores, I'm giving you at a 5 crore this thing, because you are giving me upfront cash. Okay. So now that you know that there is a real value, you are buying a real value, and markets are also positive or are going to be positive about this particular event. So you know that after 2 days, whenever it comes out in the media, because it's going to be a news if I find 10 kg gold in my backyard, yeah. So you will know that the sentiment around my land will be suddenly it will turn positive. So everybody in my locality will try to come and bargain and try to purchase that land. So you know that going forward, the sentiment around my land is going to be positive, and therefore you are buying. Since you have the liquidity, therefore you are buying. You are able to buy, and you believe in the fundamental. So you have the mix of three things. So, but just imagine if there was a pandemic and everybody was trying to save, not try to look for the luxury or a better life, but they were just trying to save their families, coming to the basic needs. So at that point of time, you will think that if I buy this land, then probably, despite the news, even if it comes out on the media, I don't think people will be willing to pay, because they all want to keep their cash, because everybody is uncertain what is coming in the future, whether the entire humanity will be extinct or not. So that uncertainty, when it was there last year, when it was completely dark, nobody knew. Yeah, we have not seen pandemic in the last 100 years or whatever. So nobody knew how long will it last and how will the government deal with it. And I mean, how much of the population will die, and how much, what will the condition of the economy. So everything was in dark, and because markets hate uncertainty, whatever be it. Nobody likes uncertainty. So therefore, the moment there is an uncertainty in the market, the sentiment is completely destroyed. But then, after few months, this was in the month of April, early April. That was the point where, even markets, after 2 months, by that time the news was there, and it was already 2 months in the pandemic. So markets realized that the prices that were quoting around that time, so in a way, probably the stronger hands, they discounted for the fact that what if the vaccine is discovered in the next 6 months, or maybe a year, or maybe 2 years? How much the prices can go down from here? So the basic assumption was that this can be dealt with. So humanity is going to survive, and companies are not going to be closed down. So economy will survive. It might take some time, but it will stand on its feet after maybe 1 year or 2 years. So I will buy today. I will not wait for the gold to be discovered and announced in the media. Then I will not come and buy. So that example that I was giving in the backyard gold example. So if you knew this information, you would want to buy this land from me today, not after I had announced in the media. Because after I would have announced in the media, by the time it is out there in the public domain, everybody would pay a higher price. So you will not get this deal. Yeah. So looking at the future, what is coming, not what is happening right now, but what will happen, that is what market tries to price in. Now again, there is one more interesting catch to it. There is always a gap between the value and the price. So Professor Bannerjee, I mean, I would expect that he would agree with me that value is something which is derived fundamentally. The value, the basic value. Yeah. So value is something, but the market price could be different. Because why prices are not at the value most of the cases? Because market is going to price in the value not what is today, but market is trying to price in the value what will be tomorrow, or 6 months down the line, 2 years down the line. So understand this thing very clearly. The price is the expectation of the value after X number of days or X period of time in future. And the moment you try to extrapolate things into the future, there is going to be some bit of assumption, there is going to be some bit of sentiment playing around, there is going to be some bit of error that is going to be there when we are trying to expect what will happen. So Tendulkar, whenever he came to play, I thought that he will at least score 50, because that's what generally he does. So I'm trying to forecast right at the beginning of the match what Tendulkar is expected to score today. So if it is Pakistan, I will say that he will score 50. If it is Zimbabwe, I will expect him to score 70. If it is Bangladesh, maybe 100. Like that, yeah. And if he is playing against our locality or Pada, then I will expect him to score 500. Right. So based on certain data points, we try to extrapolate and evaluate what is going to the value into the future, and that is what the price is today. So it is in one line what market thinks the price should be, not actually what the value is, but what market thinks that the entire community or entire market as a whole will come to the conclusion. So everybody is actually thinking what other guy is going to think, or what everybody is going to think about the value of this particular asset in future. Is it clear? Someone just give me a yes or a no. You can just put in yes no on that chat. Yeah, Joel, have I been able to put across this point clearly? Joel?
Yes, in the chat box, many of the students have responded back.
Okay.
Yes.
Okay.
Oh,
Okay.
sorry. I also realized my mic was on mute. My apologies.
Yeah.
um,
So
yeah.
I just.
So I think it makes a lot of sense, Prasanjit. I think now what we should do is with this lens, take a
Hmm.
look at Bajaj Auto
Yes, I
and
was
see.
coming to that. So
Yeah,
before I
perfect.
wanted to move to Bajaj Auto, I just wanted to make certain things clear. So
Yeah.
this is one saying in the market: markets may remain irrational more than you can remain solvent. Remember this. What it means is that markets can just go crazy and go in a direction, or you might see prices which you cannot justify fundamentally. And if you do not have a sound money management practice, if you are coming to the market from a trading perspective or an investment perspective as a professional who wants to make money out of the market, whether it is intraday or whether it is like a Warren Buffett style trading or investment, whatever it is, if you do not have a proper money management practice, it could be troublesome. So with this, let's just move on to the Bajaj Auto. I'm going to use the spider because that's what is slightly easy for me. I mean, just don't think that free
But
sites
remember, there
are.
are a lot of tools available out there. So
Yes.
Spider is just one of them. Right?
Yeah. So it is just a software which happens to been using it for some time. So yeah. So okay. So let's just go back to a bit. Okay. So this is the plot that you are seeing right now. Is
Um, Prasanjit, we are able to see your presentation, not your
okay. Okay.
screen.
Okay. 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 Yeah. 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 Just a minute. Yeah. Let me change this thing. New share. I just shared the whole this thing, whole screen. Where is the whole screen? Share.
Maybe you can first
Screen.
stop sharing and then try sharing.
Yeah.
Yeah. Now we can see your screen.
The entire screen. Google
Yeah, I
page.
can see. I can see. Yes, I can see a Chrome page open,
Okay. Yeah. Good.
and here is the right.
So this is not spider. Yeah. This is what charts.
Bharat
Okay.
Limited. Yeah,
ठीक है.
Bajaj
So
Auto now.
basically,
Perfect.
this is a weekly chart of Bajaj Auto. So weekly chart means all the candles, the dandas that you can see are basically a representation of the weekly open, high, low, close price. I'm sure that yesterday would have been you have been uh, learned about all this. So what is it? So let's just go back to let's say 2015. So I'm going to go back a bit. Yeah. So this is 2000. This is 2016, right? So what was just happening, if you look at the broad this thing sense of the stock, so this was the basic support trend line that was defining the trend, correct? So there was a nice trend which was going on. This started from 2011, and this was kind of going up in a nice little drift. And then in the, as you can see, this is May 2016. At around this point, it's kind of started to move back and forth for 1 year. So this was June 2015. This point, from this point, let me just use some this thing tools. Yeah, yeah. Okay, just a minute. Let me move the chat window. Okay, so I hope you are able to see the screen. So this
Yeah,
is
all good.
what I'm talking about. So this was the area where the stock was facing some kind of a supply because of whatever reason. Because maybe fundamentally it was not worthwhile or worth above 2600. So this is like 2600 price mark. And then after that, what happened was the stock. Let me just close this. Okay. So I'm just moving. Now you see that somehow the stock started to move. So I think I need to delete this. So after this, you see, after that, this breakout came in, again, there must be something fundamentally which might have changed, which I'm not aware. So after this point, the stock again started to move in a new, with some new vigor, or you can say with new um, trend. I mean, the trend was of course up, but then there must have been some fundamental change in the equilibrium. So this is the equilibrium that I was talking about. I guess I had talked about the equilibrium yesterday. So there, this is the point where the equilibrium changed, and you see the prices drifted upwards, and then again the prices would have corrected because of the market sentiment, because the market might have come down. This was 2016, and then it again bounced off. So the story keeps on going on like this, okay? And you see in 2018 it came down around to the long-term trend line which we had drawn earlier. You see this trend line that was there earlier is still holding good. So let me just remove it. Okay, and now something strange happened here. So as you will see, the stock just a minute, I just came too far, so let me just remove one of the lines. So this line is not relevant. Yeah, I'm just working with the red colored line as of now. So at this point, as you can see, the stock kind of uh, in a way tested those support areas and really bounced off. There was intra-week penetration, but then it more or less, I would say, held on to the price line as well. And as a matter of fact, a new base was formed. So this is what now the market would be looking at. So you see these bases, flat areas. So this is again something which markets would be looking at. And then finally in Feb, because of the pandemic, the whole thing cracked down below this. So your long-term support line was taken out. This intermediate base was also taken out. So this is again 2600 levels, which was taken out. So why did the prices break? And to whatever level it would have gone down. Technically, we have certain formulas that are being used to identify what is the extent to which prices can go, and they are based on historically what has happened. Okay. Second, prices are always driven or to some extent also influenced by how people have bought, at what price they have bought. So based on their buying price and selling price that they have done earlier, these stock prices in future are also going to be affected. For example, if you remember this 2600 price, you see at this particular point, I said that broadly the stock came down to 2600, and then again it took off, again it came down to 2600 and it bounced off. Can you explain why did this 2600 area was broadly taken as a support? Anybody who has any idea? Go on, you can unmute.
So because the graph is going down,
No, graph was going down, that is
down
okay.
the line.
So,
Down the line.
okay, forget about the line. There is one more reason. There is one more reason. So the reason is, shall I tell you the answer? Anybody who wants to give it a shot? You have a prize for it. You'll get a job.
It's the graph is intersecting the upward curve, that upward line, upward slope, and it's just below that at
Okay,
and
let
it's
me make your
the
life
bottom.
even more difficult. The answer has got nothing to do with whatever was there on the screen.
So maybe the company at that time was fundamentally weak.
No, I'm saying why did the prices more or less
Is the
came down to
bottom
this
two in
area?
that period.
Support
They
line.
took off. They took off. Every time it came down near this area, they took off.
Oh, the slope. It is the slope.
नहीं ये ऊपर क्यों चला गया? Why is it that they bounced off from this 2600 area? ये bounce आया ना इधर से. This is where it bounced off, right? This point and
Yes.
this point, this area. I'm saying, what is the
It is
reason?
People
a strong
started
support
buying
line
more
over there.
stocks. I mean,
It
investing
is a
in them.
strong support line over there. That is in the buyer has more dominating to the seller. This is the thing.
Yes, there was a support line like this which I talked about, but I'm saying that even that has got nothing to do with it. So even this support line that you think is there has got nothing to do with it.
Sir, maybe because this company is good fundamentally, and at that point,
No,
we are getting the stock at low price.
no. I just
Sir,
give
maybe
you,
it was
I'll give,
repeating the
wait, wait.
pattern.
I'll give you a hint. Just go back to 4 or 5 minutes of my words that I said when I was giving an example at around 2016. When I was giving an example of 2016, when I was
Sir, about the equilibrium that from there the price will go upward.
correct. You remember this point I was discussing? This
Yes, sir.
point I was discussing. You remember
Yes, sir.
this now? So this was the point that I was discussing, correct? This was the supply area which was taken out, correct? So this was the broad area where people had bought, correct? You remember now?
Yes, sir.
Okay, now just I'm going to ये तो move हो जा रहा है, so let me just redraw this thing properly. I will delete all of it. Okay. So I said why, what is the reason why the prices had taken a support twice around these points. So the answer actually somehow came from this fact that earlier people actually had this price memory where they had bought this stock before it actually took off, right? This was the launch pad. So people had this memory that they had bought this share at around this point, and this was a point where which was not being broken for a very long time, correct? This was a sloping resistance area which was not being broken for a very long time. It was about 1 year that people had to wait. So when such a breakout happens, people remember, because at this point of time, I'm calling this point X. I'm calling this breakout point as X. So at this point X, people had lot of you can say momentum traders, lot of fundamental based maybe hedge funds, they all get in because there has to be something uh, happening positive on the fundamental side as well. And whatever is the underlying logic of a fund house or big players buying, technical analysis is just in identifying the footprints that something is being bought. I don't know why it is being bought. That guy only knows why he is buying. But I am just trying to look at the footprints of those big players, not the operators. I mean, for such a stock, no operator can manipulate single-handedly. So if you are thinking of the Harshad Mehta thing, that I mean, such things don't happen now. But of course, I just wanted to bring some clarity to the point that Professor Bannerjee was saying, that operators, yes, they are in the market. Cartels, they are. But it is not that, every such large stock can be manipulated. They don't get into such stocks. If they have to manipulate, they will pick up some mid cap. There are 200 other stocks which they can manipulate. So if you ask me, no operator gets into such large stocks. That's foolish, because in such large stocks there are so many even larger players. So the larger players, maybe it could be a Citibank, it could be a there are several hedge funds operating in India, the mutual funds, the LIC. So you really cannot say that all of them are in sync. No, the fight is all between the big elephants in large caps. So maybe some large fund was short and some large fund thought it's a buy, and majority shifted on the buy side at this point. So what I'm saying is that people have price memory. So this is something which not necessarily will always work, But technically, yes, it is, because maybe at this point this stock stayed for a, in equilibrium for a very long time. So that means this was a very rock solid price area, which fundamentally could be justified and fundamentally would be very cheap. Yeah. So this is the reason why it bounced. According to me, if you ask me, I would say that this was it was to do with the price memory. So there is a concept of role reversal, which I probably did not discuss yesterday. So that's the principle it is coming from. Now what happened after this? So it went up, and then yes, sir.
When you draw this support line, if you go just a little bit back
On the left side,
on the left side,
right, sir.
Just drawing this support line, does it show a classic head and shoulders here?
Yes, technically you can say it is. It is, but then in that case, this is where the breakdown should have come in. This is where the breakdown should have come in from this. So this is the head. This is the right shoulder. This is the left.
This will be the left.
Sir,
shoulder.
I just want to, since you raised this point, I just want to put across my thoughts very bluntly on technical analysis. Even with Joel being there, I would say that in India, probably 80% of the people who say that they are using technical analysis, they don't use technical analysis, they abuse technical analysis. That's one point I want to make very clearly. Why I'm saying they abuse
Joel
technical
has no
analysis.
problem with you saying this.
Yeah, I mean, so first of all, people do not have the right set of knowledge, which they should have. So I'm not trying to promote CMT. I have got nothing to do with CMT. Okay. So, but then the good thing is that if you take a formal course, which is to do with any sort of education, if someone takes a formal course, then at least he has the idea of what he is using and how it should be used. Well, school में जाना जरूरी है. So unless and until if I am a genius, मेरे को स्कूल में जाना पड़ेगा, मेरे को पढ़ना पड़ेगा, 12th ग्रेजुएशन करना पड़ेगा, इंजीनियरिंग सीखना है तो मेरे को जाना पड़ेगा इंजीनियरिंग में. I'm not Newton or Einstein. So that is one thing. Second बात ये है कि people get caught in the definition or the geometries or the names. So मेरे लिए technical analysis is not about the definition or the the geometrical shapes, mechanically looking at them. No, one should look at the psychological aspect. What is running behind those shapes? What is running inside the minds of the people who are there holding that stock? Those who have bought and sold that stock, because the prices are driven by their behavior, what they are thinking. Correct, not by some geometrical shape. The geometrical shape are a result of their behavior. So if I can just peek inside the mind of the people who are who have bought a particular stock at a particular point, then I will know what this guy is thinking. Let's say, for example, if I had the information that Goldman Sachs, Nomura, Citibank, and LIC, all of them bought Bajaj Auto in 2016 at 2400. Let's say I had this information, because let's say whatever, I had this information. So with this information, now I can easily say if they had bought at 2400, so they will not allow the stock to go down below 2400, because that's their cost. And that is how they, so their reason to buy at 2400, they might be having some fundamental reason, which I'm completely unaware. But I know, goddamn, whatever is the reason, 2400 mein liya hai, so they will not allow somehow the prices to go down below 2400. Or even if they are thinking 2400 is a good deal, so the rest of the fund houses will also agree to that, because most of them think on the same direction, because they have a similar qualification background. So they run very similar strategies, although they might differ, but then that's the idea. So if I had this information, 2400 mein strong hands in 2016 mein buy kiya tha, so they will again try to come back and buy the stock at that price. So maybe this could have happened that they bought at 2400 and they sold at this point. They again bought at this point and they just hope that it will go up again. But then when it came down again, so at this point they again bought more. ऐसा हो सकता है ना?
Yes.
So ऐसा ही होता है मार्केट में मेरे हिसाब से. Even when we recommend certain stocks, let's say some client whom I had made Bajaj Auto buy at 2400, and if I felt that 3000 was a good deal for him to let go the stock, I might have asked him to sell. उसके बाद जब वो वापस से 6 महीने 7 महीने बाद when the stock prices come down, people again they are happy to again re-enter at the same price because they have something called price memory. So somehow typically it is something to do with the behavioral aspect also. That's why I say sentiments market में बहुत important है, मतलब how people react to prices. So it's not always the rational decision making. It is also emotionally how you feel about the market, emotionally how you feel about the stock, emotionally how you feel fundamentals कहाँ पे हैं. So there is always this memory emotion factor playing in, and of course mathematical चीज तो है ही. So behaviorally, if I had bought at 2400, I will try to defend. So as a strong player, if I had bought at this 2400 level, every time it came down 24, 25, I will try to defend. यही मेरे हिसाब से logical reasoning है why this things works. So coming to your point of whether it is a head and shoulder, I would say that yes, apparently it looks like this, but then the breakdown should have happened ideally at this point. So this should have been the breakdown area, but it did not happen.
So in that case, basically this resistance point becomes a very strong resistance for this particular script.
Which one, sir? This area?
No, sorry, rather the support point.
Absolutely.
Okay.
Absolutely.
Okay, thank you, Krishna.
Yeah, so it is all to do with the behavior.
Yeah.
So that's the reason, like when you think of price action, technical analysis, charts, I try to think of it from from the perspective of the buyer and the seller. If I was a strong hand, if I was the guy who bought, if I was the guy who sold, what will I be thinking? So it's like a game of chess for me. That's how I think. So that's like my advice to all of you. So I'm going to just keep it here for some time. Okay. So now you see, during the pandemic, what happened was it breaks down this level completely. So this was taken out, obviously, because in the pandemic, nobody was sure what is going to come. So probably the guys who had bought their long-term holdings, and mind it, these hedge funds or these mutual funds, they don't buy and sell it tomorrow. They keep it for some time. They have certain mandates. They keep it for some time. Okay. Joel, can you just please keep a track of the chat window as well, because I'm not looking at that. So if
I am Prasenjit.
Okay.
Also in reply to I think Sonik, no, Soham's question just now. But yeah, you carry on. If there's anything worthwhile, not worthwhile,
So
relevant for
after
you to
this
answer, I'll
point,
come
when it bounced off, so let's say this was taken out. So I would say that the guys who had bought at these levels, so let's say the strong player who bought at these levels, irrespective of whether he has sold at this point or not, so this level was defended, and during the pandemic, probably that is where they would have come out of the stocks, because they know where to come out of the stock. They are much smarter than us. Don't think that they sold at these levels. No. This is where probably the people like us would have sold, and this is where probably the retail people would have sold. The most uninformed to say, not retail is a wrong word that I chose, but generally that's how it is in terms of the information network, to be very honest. I'm not trying to be diplomatically correct. So the stronger hands, they would certainly come out at these levels, because they don't mind, because their costing is much lesser. Maybe they would have bought around these levels also, so they keep on accumulating, right? So it is not that they had only bought at this particular price. They would have bought in here earlier as well. So उनका एवरेजिंग कॉस्टिंग बहुत नीचे का होगा, मतलब 2200-2300 का होगा. So they don't mind selling it at 3000 ना. What is the problem? So what just happened after this point is the question. So at around the lows of the March, it was I think 23rd of March or the last week of March, where markets made a bottom, and the recovery actually came in from the first week of April, where probably markets never went down after that. So I would say that maybe fundamentally this was a price point where There was nothing much more to go at a market wide level. Forget about this particular stock. If I just pick up this particular index, let's see what happened at the index level at around these areas. So this is March, end of March, okay, 2020. So end of March 2020 is this where it is. So typically, again, if you would see on Nifty, see, not every price low or high you can define or justify technically. Nobody can. That's stupidity to say that I know that this is going to be the low, that is going to be the high. Nobody can dictate. Then you will be God. You will be able to see the future. But then you can make a reasonable assumption or an expectation where everybody will behave. You expect everybody to behave in the same way because you are thinking from the perspective of the guy who is short, who is long, and probability wise, like how many people are going to behave in a particular way. So if there was a deep valuation at around these levels, which was, let's say, the lows of 2016, okay? Because after the Modi government came in, this was the point where Modi government came in, okay? 2000. I think you're able to see my cursor. So this is the point where Modi government breakout thing happened, okay? And then prices moved up, came down, correction as a natural sequence, and then again it went up, and this was the last correction that you could see during the start of the bull run. So every low always has some imprint on the minds of the people, and they always feel that yes, it was a value area, because after that the prices would have moved up. So every low creates some kind of a excitement in the buyers and anxiety in the minds of the sellers. So those who are sellers, they are afraid that इतना नीचे आ गया है, अभी तो शायद buyer ज़्यादा shift हो जाएगा. So the guy who was a seller, let's say we had a team of 10 sellers. So when prices come down and they are near the previous low or some previous low, then as a seller there is always this doubt in my mind that मैं तो 10 जन था हमारा टीम, अभी वो 10 जन में से कितना मेरे साथ में, I don't know. So I'm always afraid about the fact that ऐसा नहीं हो कि वो 10 में से 7 जन अभी bear से bull बन गए हैं and only 3 of us are left. So I'm always afraid of the fact कि ये disbalance कब shift हो जाए. So I don't want to be too early, I don't want to be too late. So I don't want to be the last bull to become a bear. So इसके लिए this is what everybody keeps on thinking. तो वो एक ऐसा point आता है जहां पे if you are smart, if you are able to determine what others are going to think as a cumulative or community as a whole. So combined, if you are able to predict about the others' behavior, so you have the deal. So basically, this law, maybe I can, in retrospect, I can explain that this law was something which markets were looking at. Obviously, these highs were also the point where markets were looking at. So they always act as some sort of a value area. So this low was again going to act as a support area. So this is the line chart. Now let me just remove this thing and convert this into a candle chart. So as you can see, let me remove this retracement line also. Okay, so what happened actually was slightly different. This is clear. So I was saying that this is going to be as a support, which it of course did not respect. This low again, more or less, and again this low, which was around 7,000, 1,600, 7,000 ka level tha, which never came down. So as a buyer, you are going to be interested maybe at these levels, maybe at around these levels, or maybe at around these levels. So there is always a guesswork which is going on, and even some buyers would have thought that this is also a good buy. So there is always a game of what is the likelihood. Now, if I was a buyer, I would not have given much weightage to this support, because obviously there is a support which is being broken here. So this was actually the point where I would have said that markets are going to crash, because this is a technical formation. Let me just clear all of it. So okay, I'm going to use the trend lines. So this is something called a rising wedge. Those who are familiar with the concepts of the wedge formations. So this is how it went up. Okay. So you see, so this is what is the technical formation that I'm looking at. So it was a clear sell. Technically, the targets would have been somewhere around here. To be very honest, I would not have looked anything beyond this. So if I was short at 11,000, I would have said I'm going to cover my shorts at 9,000. That's it. उसके बाद में 9,000 के बाद में वो 7,500 चला गया, 8,000 चला गया. That is not which I would have been able to predict. Okay. But then what just happened at these levels was something very interesting. This is not to do with the the normal existing knowledge that you have in the books, but I have devised an indicator which can measure the market sentiment, which I call True Breadth Index. So it tries to measure the number of stocks and the sentiment behind each of the stocks. So in the first week of April, so I'm talking about this particular candle. So this is a weekly chart. So I'm talking about this red candle, this particular candle. Okay, here. So at around this particular candle, let me mark it. This one. There was hardly any stock from a sentiment perspective that was, likely to go any further negative. So out of the universe of 200 stocks, I saw that there is nothing which I as a seller will want to sell. So there were two possibilities. If you have nothing to sell, if you don't want to sell anything, or which is not worthwhile selling anything. See, I have a Maruti car 800. Okay? I have a car which I bought in 2008. It is just there in my backyard. I don't know what price will I get. Maybe 15,000, 20,000, 30,000. So am I selling it? No, I'm not selling it because I don't want that 30,000. It is a precious car. I have used it. I want to keep it from my sentimental value. So I don't want to sell this car for 15,000 or 20,000. I'll rather keep it. So this is what is the sentiment. So what my data told me that there is no share that you will want to sell, which is worth selling. So in the absence of anything that you will want to sell, there are two possibilities. Either prices will go flat and remain range bound for some time, or alternately, the prices are for sure to bounce back from here. अगर प्राइस को नीचे नहीं जाना है तो ऊपर ही जाना पड़ेगा ना, और किधर जाएगा? साइडवेज हो सकता है, बट गिरेगा तो नहीं. So this is how certain tools again can be used. I'm not saying that it's a holy grail, but then this indicator which I have devised has a reasonable credibility, which I happened to present last year in the CMT this thing also platform. So it has some bit of credibility, and it's been long ever since, and it is still continuing to be long. So that's where the sentiment thing comes in, and the valuations also would have come in. So valuation perspective में I don't have any idea, but maybe हो सकता है कि 9,000 पे भी value था या 10,000 पे भी value था, लेकिन फिर भी मार्केट और नीचे चला गया ना. क्यों? क्योंकि वो प्रॉब्लम है, वो मतलब सेंटिमेंट के लिए. So let's say if there is if there is some medical emergency in my house and I have nothing to sell, what will I do? I will sell my car, I will sell my gold or land, whatever. I will not, despite knowing that my car is worth whatever. Let's say it is worth 1 lakh rupees. I will be willing to sell that car at 80,000, 70,000 in the immediate need of cash. ये करते हैं ना हम. So this is what it is. So हमेशा हर चीज वो fundamentally it is not driven. It need not be driven by fundamentals only. I know that it is not worthwhile selling at 70,000, but what do? I need money. Despite knowing that it is worth 1 lakh, I am selling it at 70,000 because of certain other reasons. तो ये money dynamics भी ना बहुत मतलब play करता है. So let's say I remember this example. I'm just taking 2 more minutes to tell you a small story. There was this stock called DHFL, which I'm sure that you would have heard of it. So DHFL was trading at say 700 rupees. Let me show you the chart. Yeah, so this is the chart I'm talking about. Let me just remove all of it. I'm going back here. So these are the good days of DHFL. This is a weekly chart, and these are the good days of DHFL. Okay, all seems to be perfect. Now you see, this is a single week sell off, and let me convert this into a daily chart. You will understand. This is the point I'm talking about. This is a daily chart of DHFL. Okay. It was all going good, and then you see on the same day it broke this 600 odd levels, and it, like, in a just a matter of 2-3 days it came down to 450 odd levels. Uske baad it again bounced off. So in 2019, so ऐसे बड़े बड़े सेल ऑफ आए हैं इसमें. यहाँ पे ये this was very interesting. You see this fall. So if you thought that this is a big fall, now look at this. The same day the stock high was 615 and the stock made a low of 274 rupees. Some of the positions were also there with our brokerage house, some of the clients were holding. So that day I saw a very interesting phenomena. All those people who had DHFL in their portfolios, so their portfolios came down drastically. Let's say if I had 1000 DHFL, let's say only DHFL in my portfolio. So what was the worth of my portfolio? 6 lakh rupees, 1000 quantity into 600 rupees. So based on that 6 lakh rupees worth of DHFL, when I'm looking at this particular area till this date, okay, brokers usually give you the facility of leveraging, wherein you can keep your DHFL or some stock as a collateral and you can buy some other stock based on that DHFL. So let's say if I had 6 lakh rupees of DHFL and if I did not have an immediate cash in my bank account, I can easily always call up my broker and tell him कि boss मेरे को Reliance खरीदना है, so 2 लाख रुपए का Reliance ले लो, मेरे पास में तो DHFL वो तो है ही तुम्हारे पास में, so अगर कुछ हुआ, if I don't pay the money, you वहां से बेच देना मेरा DHFL and you recover your money. And in case if I'm able to sell Reliance, I will sell Reliance, and in case if I don't, I will pay you the cash in some time, maybe after 7 days. So based on my 6 lakh rupees of DHFL, let's say you are the broker and you buy 3 lakh rupees of Reliance. You are happy because 6 lakh रुपए का stock तुम्हारे पास में है. It's like giving a loan of 3 lakh rupees based on an asset of 6 lakh. No problem. You can do that. Now see what happened. Same day, the guy who had given me a loan of 3 lakh rupees, what is the worth of my stock by the end of the day? Nothing. It came down, you see, and in the next 2 days, it came down to 300 rupees. Okay, so it came down below 300 in the matter of few days. So this is a weekly chart. So in 1 week's time, 2 weeks time, it is down to 75 rupees. अभी यहाँ पे क्या problem हो रहा है कि the moment you have given me a loan of 3 lakh rupees based on my holding of 6 lakh rupees which was yesterday, and overnight अगर मेरा valuation पूरा गिर गया, so what will you do? You will say boss पैसा दो, because your collateral has got no value now. I'm going to be out of the pocket, right? So I can say कि मैं नहीं दूंगा पैसा तुमको. So you are afraid. So you force me to sell whatever Reliance I had bought. Then you say, boss, I don't care. You give me the cash right now for Reliance, 3 lakh rupees right now. Or I'm going to sell your entire Reliance. I don't want to risk my money, because if I sell your entire DHFL, I will not be able to recover my money, na? So that day, lot of people were forced to sell Reliance and other stocks. It could be ITC, it could be any goddamn thing. It could be gold also, gold Bs, gold ETFs, which has got bloody nothing to do with DHFL or stock market, in a way. So people are selling gold also because they had DHFL. So this is how the money dynamics plays an important role. So that's why I was giving the example of, if I had medical emergency at my house, I might be selling my car, which is worth 1 lakh rupees for 70,000. There is no rationality. There is a rationality which cannot be always measured in your numbers fundamentally. So I hope I have made this point clear to you. So coming back to the Bajaj Auto stuff, fundamentally to me, there was,
Prasanjit, just one quick moment. We are reaching 1 p.m., which is around the scheduled end of the session. So maybe you can just talk through Bajaj Auto and
so basically, I would say that as Professor Bannerjee said, this stock, I'm not in a position to comment technically right now because of my compliance reasons. But then, yes, it is true that whatever you buy, you have to be careful at what price you are buying and when you are buying. So a good company need not be a good deal, correct? And so that's what you have to keep in mind. So technically, we have certain indicators which we use to measure whether the stock is worthwhile buying or not. So there are a lot of combinations, indicators, oscillators that we use in a way that we feel that it is not whether it is worthwhile buying a stock or not, and even if we are buying, when to come out. Correct. So with this, I will just try to conclude this session. So yeah, Joel, questions you have?
Yeah. From the students, any questions at this point? I'm sure the session has been very educative for you about how a real professional uses technical analysis to understand market sentiment, right? Obviously, whether it's fundamental analysis or technical analysis, these are disciplines to be learned, to be practiced, and your skill only grows with the amount of time and effort that you put into it, right? But if you have any questions for Prasenjit right now would be a good time to share them on the chat.
I have only one request.
Dr.
If
Anupam?
it is not very proprietary information, if Prashanjit would share with us at a later point in time a true breadth indicator that
Yes.
he has developed himself.
Yes, sir. Indeed, I think we have this video link as well with Joel. Joel, is it possible to share? Or is it
Just
internet?
let me check. This was TrueBread was put up on the CMT channel, right?
Absolutely.
Yeah. Just one
Okay,
moment while I find it.
all right.
So,
That will
but
be
I would
a
definitely
very good.
recommend that everyone visits the CMT Association YouTube channel. Prasenjit's there are 5 videos Prasenjit has put up that are really well put together from a thought and kind of depth perspective, and it so you will see them in the series that we call the Technical Analysis Toolkit.
Yeah.
Right, so they are all in the videos section. Uh, you
Well,
will
I
find
just
it.
forwarded you the link
Uh-huh.
on WhatsApp for this thing virtual meet session that we did.
Just one moment. Meanwhile, I've just added the link to the CMT YouTube channel. Let me also send to you.
That CMT channel YouTube. I mean,
Oh, right. So this one, this actually will not, the recording will not be available to everyone because this is in our member archives,
acha. Okay.
right? So this is only for folks who are either candidates of the CMT program or members of the CMT association.
Okay. I see.
Okay,
Okay.
but maybe we can do a separate session some other
Yes,
time.
we can do a separate session for sure. For
Yeah,
sure.
wonderful.
Great. Thank you.
Thank you, sir. So that will be it. Yes, sir. So any other questions from any of the students? I think the students have got very afraid or scared of the way I spoke. You know, I get very aggressive, yeah? Because I speak from my heart. So
Yeah. No, but see that kind of passion is really what breeds excellence, and this is a good example for students as well to understand
see, I had
that.
to be blunt. I could have been very diplomatically correct and spoken about only the good things.
Right.
So I took out this example of DHFL because that's what is the reality. That day,
Yes.
40 lakh shares were
Yeah,
sold in front of my eyes.
Prashanjit, one question is came.
Yeah, Shomik
Shomik
has a
Chatterjee.
question.
Yes.
Money dynamics comes into psychology or technical part of the financial markets. Prashant, I'll
Let
let
me,
you take the question first, and then I'll
yes,
add my
yes.
comments. Go for it.
Right. So technical analysis, what is technical analysis for you? Looking at some stupid lines on the chart. See, technical analysis is the study of the price action and the market behavior. And you are using the price charts for your convenience, which I explained yesterday. It is not necessary that only you look at the price charts. You can have your technical models based on price, volume, behavior, or other market information that comes in. There are other different types of market information that you can extract indirectly. Okay, so all of it comprises into the technical skill set arsenal. So like, for example, if I tell you that I can predict what is the immediate market momentum on an intraday scale by looking at the buy orders that are coming in the next that are coming in the last 10 minutes. So if I can keep a track of the buy orders and the sell orders on index, okay, so how many buy orders are coming, how many sell orders are coming over the, let's say, last 10 minutes window. So agar buy order zyada aa raha hai, so I know that immediately market sentiment is positive because most of the people are placing buy orders then compared to the sell orders. Now you will say कि जितना buy होता है उतना ही तो sell होता है. So if I am buying, somebody is selling. वो बात सही है, लेकिन there is a difference in this. वो ये है कि there is something called the bid ask, मतलब लेने का भाव, बेचने का भाव. So the lene ka bhav could be, if you want to buy, let's say the price could be 101. But if you wanted to sell the same thing, it could be 100. Let's say when you go to the bank for currency exchange, you will see that they will say, if you want to buy dollar from me, you will have to pay 74 rupees. But if you want to sell dollar to me, if you have dollar and you want to encash it to rupee, I will give you 73 rupees. So correct. So if you are buying something at 74, that means I did not go and sell it to you. You came to me and the trade was at 74. That means if the market spread was at 73, 74 and the trade happened at 74, that means the guy who sold did not he was passive, but the guy who bought was active. So that's a buy order. And similarly vice versa. So is tarike se, if you can keep a track, so there are a lot of ways. So this is one indicator which I have in mind, which I'm again trying to proprietarize it, and this can be a very powerful tool to predict very short term price moves. Okay, so इस तरीके से there are various ways. So ये मैं जो कर रहा हूँ, what is it? Do you call it sentiment? Yes, it has got to do with sentiment, but it is a a price data that I'm using. I'm using tech data. So don't there is I mean, to me there is a very uh, not very clear difference between sentiment, market breadth, technical analysis, all these charts and everything. So ultimately at the end of the day, you are just trying to predict the behavior of the market participants. That is what is technical analysis. सीधा बात है. What the buyer is thinking, what the seller is thinking. It's like a game of chess. आपको प्रेडिक्ट करना है कि वो सेलर क्या सोचेगा, बायर क्या सोच रहा है, बस. And the time scale could vary. That's it. I hope this answers your question.
Thank you, Prasidh.
Can I just come in for a few seconds?
Sure, sir.
I'm Professor Bannerjee here. Just can I come in for a few seconds?
Absolutely, sir.
Yeah. Am I visible?
You are, sir.
I'm visible on the screen. Okay.
Yes,
Since there was a lot of questions about sentiment, emotions, and all, I may just like to say here that there is a separate branch of study now in the finance domain, which is called behavioral finance.
Yes, it is there in the CMT curriculum.
Yeah. So of course, this is one of the optional subjects to be taught in IEM. We do not teach it right now at the moment, but it is there in the comprehensive syllabus of the university. Behavioral finance has become very, very important branch. 10 years back, people didn't even talk about such a subject, but now it is becoming very important and more popular. Precisely for the same reasons, people want to understand more about the emotions driving various financial, markets, financial decisions, and so on. So I thought the students should be aware of this, that there is now a branch of study called behavioral finance.
Absolutely. So, like for example, if you are, let's say, bearish on Bajaj Auto, for example, you are bearish on Bajaj Auto, and if I also tell you, yes, sir, you are right, it is a stock to be shorted. Okay, so if let's say in hindsight, both of us are wrong, let's say, but then the comfort that I gave you and you gave me is something called, it could be an example of a confirmatory bias. So we tend to absorb only the information which is in line with my thought process, and we tend to discard which is not in line. So this is the branch which is like, which if you where you are aware of these biases that can come in. So very rightly said, it is a very upcoming branch, right there.
The very nice presentation, Prashanjit. Really is very nice.
No, I mean, I don't know how far the students have been able to connect, but then I'm sure that when they go to the industry,
basically they will connect and they will messages us. It's a very nice presentation. Lot of comments will come to my personal messages.
Okay.
Really is great. And now I would like to say our principal said to say something.
I am more on a listening mode and try to get as much from the experts as I can. So, I mean, if we have no more questions there, this was an excellent session. Then maybe break for lunch now and then come back again when the scheduled session is there.
I understand that this was the last session, sir.
Yes,
Oh,
sir.
okay. All right. This was the last session. All right.
Right. So on the agenda is a valedictory address by Professor Shagato, and then
Okay. Okay.
students can head.
Sure. Shobhata sir.
Yes, sir. Okay. Uh, Now, I would like to say our Professor P.K. Bannerjee sir to say some few words about our three events. And now I
Okay.
just end.
All right. Thank you, Sagoto. Uh, 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 Joel, Prasenjit, and Professor Anupam, uh, and to all my participants who have been following this for the last 3 days, I can say without any hesitation that this program has been one of the most successful programs organized by the Department of Management in the last 10 years that I have been associated with this institution, Institute of Engineering Management. In the last 10 years, this is the most successful program organized by the Department of Management. In terms of student participation, we could not have expected anything more beyond what has happened. The fact that almost hundreds odd students have been following this workshop for the last 3 days is the biggest encouragement that we can have, that we as faculty and people who are associated with the academic discipline in IEM, this is the biggest encouragement that we can have. And I can say this also, that with this type of encouragement that we have received, definitely we will be motivated. The faculty and the people associated with the discipline will be motivated to organize more programs which have a hands-on bearing, because the most important thing why students have responded so heavily is that it has got a very practical dimension. People have get a feeling that this is no longer a textbook program. This is something which is a hands-on program and which will equip them for certain life skills in course of time. So to that extent, I think there's a very big takeaway that we have from this program for the people who design such workshops and seminars, conferences in the future. Okay. And last but not least, I would definitely say that this would not have been possible without the strong support of Mr. Joel and the team from CMT. It would not have been possible. Okay. And of course, Mr. Professor Sogoto has been a prime mover in getting the different elements together. He has put it all together at one place, which is not a mean task, by no means a small task, and has made it into a success. I was just other day, I have received a message from my group president, Professor Dr. Satyajit Chakraborty, who attended the first day's session, and he has also lauded this effort which has been made, and said that it should be made into a video recording and all that. Of course, we are doing that. He does not know that, so we are sending him the video recordings in the YouTube link also. Uh, so once more, let me thank all of you from my side for helping to make this program such a big success. Over to you, Sogoto.
Thank you. Before we close our events, I would like to say Mr. Joel Nakor to say something about the 3 days our work session.
Thank you so much, Professor Shagato. It has been a pleasure for us to be part of this exercise as well. We're really delighted that there is such interest, such enthusiasm among students of both engineering and management. And like I spoke briefly yesterday, careers are evolving in the industry, and I think as young students about to enter the industry, you should keep an eye open for one, not only what skills you need to develop in order to be more relevant to your future careers, but also what personal life skills you need in order to, irrespective of what career you choose, manage the money that you earn and be prudent about this. I wish that we had professors like yours who took the initiative to organize a session like this when I was in college as well. But you have it, and so it's your responsibility to make the best use of it. So on that note, Professor Anupam, Professor Bannerjee, Professor Shagato, thank you so much for your time. It's been a lot of fun for us to do this as well. Now, looking forward to having all of you more active as part of the CMT community as well.
Thank you. Thank you, Joel. And now we just say a few words about the. First of all, I would like to extend my best wishes and the thanks to all students, senior faculty, Mr. Joel Pinakar, the head of India CMT Association, Mr. Abhishek Chinchalkar, the CMT chartered holder, and Mr. Prosenjit Biswas, also CMT chartered holder. But here we would also like to extend our thanks to Professor P.K. Bannerjee, sir, Professor Anupam Bhattacharya, our principal sir, Professor Dr. Sujit Datta, our HOD sir, and Dr. Satyajit Chakrabarti, our president sir. I would also include the one named the Professor Sohardo Nandi and his social media team also, who in their busy schedule have always the responded, the encouraged to us. Many thanks to TMC Association and all the students without whose support this event would not be successful. All the students will get the participation certificate soon, and thank you. Thank you very much. Now we just end the session, sir.
Thank you. Thank you
Thank
so
you
much.
very much.
Thank you. Thank you.
Stay safe.
Yeah.
Thank you, everyone. Stay safe. Bye
Thank you.
bye.
Thank you, sir.
Bye.
Bye-bye. Bye-bye.
Okay.
Okay.
Bye. Bye. See
Thanks.
you.
Right, sir. Thank you.
Can we leave now?
Yeah.
Yes.
Thank you. Thank you, sir.
Yeah. Okay.